No, it's my phone.
Oh,
We got the mobile version now, remember that?
oh, that's right. It's Finder
Yeah,
Mobile.
yeah.
Frank, how many times has that boat gone by?
What boat?
Frank, it's right in front of us, right out in the water.
I don't see it.
Frank, it's passed us like 4 times by now.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys, good morning and welcome back to another live stream. Hope you're doing well. I can play our intro music here to get us started. Happy Monday. Welcome back. Hope you're doing well. After what was kind of well, for me, it was a crazy weekend. We did a lot of stuff with the family this weekend. And in the middle of it, we had the previous president got an assassination attempt, which is absolutely crazy. I think it's the last time that happened was Reagan. I think I could be wrong on that. I should know my history a little bit better, but I believe that is right. But just a crazy number of hours that happened right there. It was just something else. What are you guys' thoughts on that? I'm curious. Let them fly in the chat here. You know, there's just something wild about whether you like someone or not, violence like that is terrible. And I think, to be honest, my opinion on it was the response from Biden was great. It's like that's exactly what we need to hear is no escalation, no, leave the conspiracy as long as possible. If the FBI do the Secret Service or the the security is probably the biggest group that's probably under fire right now. It's probably so many people are probably getting fired right now, to be honest, due to that situation, because kind of crazy. But anyways, we're taking a look at charts. We're going to look at the markets. The reason I bring that up is mostly because it did have some potentially huge implications on the market. If if anything had gone worse than it did, right, we could be having a very different conversation today, which again would be a lot of fear and questions and uncertainty. If Trump had been hit, right, there would be a lot different conversation happening on the financial markets today. So anyways, let's talk a little bit about where things are at here in response. The dollar index is just modestly higher off of its lows, but you could see the reaction initially to the Sunday open was a push higher on this. And I want to try and break this up for you guys a little bit. And election year is always not my favorite year, to be completely honest, because we do have to talk about the election because there is, impacts on what happens with the U.S. economy. There's impacts to the global economy based on the administration that takes over. So without leaving my opinions, as much as I can, leave my opinions to the side, why did the dollar index move up? Why did, let's see if this is right. TAN. Yep. Okay. So why is TAN down? This is the solar ETF. Why is the dollar index up? Why is the stock market up? And I'll tell you why. It's because after that situation on Saturday, the probabilities of Trump taking back office actually went up. Okay. Now, if you're savvy to the markets, you know that the market is the ultimate voting system. People vote with their money faster and more intelligently than they vote with anything else, right? People vote through the markets. TAN is a solar ETF. Solar ETF, there's been a lot of kind of push for clean energy from the Biden administration. It's down 4% before the market opens up. Okay, that's clue number one. The NASDAQ, the S&P 500, is moving higher pre, New York session getting started. We do have an Empire State Manufacturing Index. Thank you for the reminder. That is coming soon. Here's the thing. The market took that as weird as it might sound, that attempt may have made Trump look more like a martyr. He didn't die, but you see what I'm saying. Making an attempt on the president's life, and I'm not telling you this from opinion, I'm just showing you, like if we go to predictit.org, you can also see it here. Where's the predict the president? So what we can see here, I looked at this over the weekend while the markets were closed. And what we can see here is that there's a chart somewhere. I want to find the chart. Someone might have it. There it is. Okay, so look at this. The 7-day chart here showed that on Saturday, the probabilities for a Trump victory actually went up because you just made a lot of people really upset. And when you make people upset, it changes the way they're going to show up for voting. So whether you like him or not, making an attempt on a president's life is one great way to rally their supporters. So the market, in response to this, and this is the long story short why I'm talking about this, because this is not something that I care to really delve into my strong opinions on or anything, is because it moves the market. The market is reacting by buying the dollar, at least it was, and by buying the stock market. And there's a healthy dose of uncertainty that's been mixed into the whole picture, which is why I think gold is up as well. So there it is. That is my synopsis as to what happened and why. So I think that the markets took that as a, people are going to be upset about this. They're going to be angry about this. And when you get people's emotions tied up, they are going to vote more. That's typically why you see more polarizing people, I feel like. Well, at least in this recent, couple elections, polarizing people make their way to the top of social media, right? It's kind of a weird thing. Are there better candidates than the ones we have? I would say personally, there's, my opinion would be we could have found some better people. But at the end of the day, people who are a little bit more bombastic and exciting to watch typically get a lot more attention. So that's how it goes. Yeah, gold, dollar, and stocks were rising. Yes, that is kind of the synopsis is a little bit of uncertainty, a little bit of, okay, Trump probabilities went up over the weekend for re-election. So yeah. Okay, so let's take a look now that we've gone through the headlines for a second. Let's talk about what really matters here today, which is let's pull this up, the Empire State Manufacturing Index. Now, what is this? It comes out in 3.5 minutes. It is the level of a diffusion index based on surveyed manufacturers in New York State. And New York is a huge component of the U.S. economy as a state by itself. And so we're going to get some insight on surveyed manufacturers there on the outlook for the economy. Survey of about 200 manufacturers in New York State, which asks respondents to rate the relative level of general business conditions. I like these sorts of things a lot. The index that asks purchasing managers or manufacturing managers, people who are making decisions at companies. By the way, guys, I think there's a scam going on here in the chat, guys. Eagle 4000 trading bot. This is a scam. So guys, please don't fall for that. And in fact, I'm going to ban that. That is, we got a bunch of bots responding. Heck yeah, it's profitable. I mean, come on. Yeah, please don't fall for scams like that. Okay, so anyways, yeah, that's coming out in 2.5 minutes. JP speaking later today. I have to check the schedule, Lee. I show up to these things nowadays, which is honestly fantastic. I'm part of the show, and that's how I kind of like it. James said just sat down. All good, James. No worries. I wasn't sure at first if that was a scammy thing, but yeah, please, guys in the chat, just ignore the Eagle 4000 messages trading robot. That's sketchy stuff. Okay, so we've got just a couple minutes before that. Why does that matter? Well, because the state of the economy is interesting right now. Expectations are for rate cuts this year. There's an expectation for a rate cut in September and possibly in December, November, one of the two. Maybe we see two. My goodness, the scammy posts in the chat. All right, they're gone. I think they're gone. Drek has been banned. Goodbye, Drek. So with any of these sorts of numbers, the indexes, the PMIs, the consumer sentiment indicators, they are kind of forward-looking. That is why I like them a lot. And so we have about 1 minute to go on that. Will it cause a huge spike? It could, but there's no. Whenever we talk about spikes on news, remember that it is always about how exciting, surprising rather, or not surprising a statistic is. So we're forecasting for minus 5.5. We will see if this causes some movement in the markets. I'm just going to switch over to the all markets view so we can have a look at everything. You've got your gold up here, euro and pound here, oil, NASDAQ, S&P, US 30, and the dollar index over on this side. And we've got just about 20 seconds to go, so we can go ahead and roll our breaking news here. All right. And let's see what we got here. Should be a few seconds to go. All right. All right, so we got minus 6.6. Very, very close to what prediction was. So likely a spike is not going to happen. Again, like I was saying just before that, most of the time, what you're looking for a big volatile move is something that is new information to the market and really exciting one way or the other. So we didn't really get that. Let's go back to our individual view and let's just kind of walk through what markets are doing. I've got several different ideas that are setting up, but I want to revisit them and see if there's any entries that I could be looking out for today. Some new entry or some new ideas on the top of the top setups page. So we'll take a look at this in just a moment. So the S&P 500 continues to trend up. I'm still bullish on the indices. I'm still long XLK, which is a kind of a NASDAQ similar moving chart. XLK is specifically the technology sector in a single ETF. But I'm pretty much bullish on the NASDAQ. If we do get a deeper pullback on this one this week, I'd be interested in potentially adding some, but we'll see. I like the NASDAQ on the long side for a number of reasons, but maybe the simplest one is because it's on the EDGEFINDER, or it was. Let's see, where is it? NASDAQ right here. So we're getting a bullish reading on the NASDAQ. Seasonality is really strong. It's also an election year, so seasonally, I really like the NASDAQ scoring. Trend is to the upside. GDP giving us a positive. Services and manufacturing PMI were pretty light, so that's not a positive thing for the NASDAQ. But inflation's really coming down. We're seeing progress there. It's giving us a really bullish signal on that front. Jobs data is cooling, but it's not crashing, so we'll take that. And interest rates recently have been trending lower, which has been good for tech-centric stocks. So I like the NASDAQ long. I'm still looking for that opportunity to add to it, but I am already in positions. Gold, I'm also bullish on gold and already in a position on gold as well. My stop loss is trailed, so I can't do anything with this trade. This is one that I just continue to kind of work with. I'm just trailing stops on it. Okay, what else? I was looking last week at EU and AU. Let's have a look at those. The euro against the dollar. If I'm looking at the euro against the dollar, I would be interested in longs, but only if we get a breakout of this level. So if you see some more dollar weakness, maybe we see this push higher. Now, part of the reason when we go to the dollar index for a second, the dollar index looks to me still very bearish. We broke a key level of upward trend structure here along this trend line. But what we have to give credit to is the bulls have been holding pretty strong at this 104 level. And I've talked about this last week. Let's see if this week we get something that could push us below these levels. I believe we have retail sales this week. If you get, something disappointing on the retail spending front, we could see something like this and kind of continue this recent momentum down. Or are we just going to kind of stay in this range? We will see. But my opinion, I am more bearish than I am bullish on the dollar at this time. And that is also reflected in the scoring of the EDGEFINDER. Specifically, for my currency friends, if we go to major currency pairs for a second, what we can see is that GU, AU, and EU are all getting relatively bullish signals. Now, what that tells you is that there are more bearish readings on the dollar, which are making other currencies look more relatively attractive. I especially really like the Australian dollar against the US dollar on a pullback. We also have USD CHF, which I believe I'm still short on, dollar yen. So these are, pretty much across the board. The EDGEFINDER has been a little bit more on the bearish side of the dollar index. Let's have a look at USD CHF while I'm on the topic. So here is the dollar Swiss. I'm still in this short position. Stop loss is trailed. In fact, if we break these lows again, my goal would be to trail stops right there. So I am watching this one, continue to watch dollar Swiss on the sell side. But we've got several trades that are working really well. I've got a couple entries that are pending, but just waiting to see if I can get those set up. Let's see. USD CAD, NZD USD, I'm neutral on just because the EDGEFINDER doesn't give us a strong reading. But let's go take a look at the Australian dollar against the US dollar. So if I pull this one up, daily chart here. So the daily chart looks really strong. Looks like we've really made a significant breakout here at that 67 level. But I would have to see a pullback before I can touch it. And this has been kind of frustrating. I mean, I'm in a lot of trades that are just running hot, that I'm trailing stops on and things are going well on. But then I also have a lot of trades that I'd like to join, but I haven't been able to get a chance to enter. But I think that's truthfully, that's just trading 101. Sometimes you just have to sit on the sidelines and wait for stuff to come to you. I mean, think about this, guys. This is a good example of patience coming into play. If you were somebody who really wanted to buy dollar yen, as an example, look how you might have been waiting and waiting and waiting and feeling the pressure to just go long if you were bullish on it. I'm just saying, if you had a system that was telling you, oh, I want to stay bullish here. Well, look how quickly this market has fallen back down to this level of support. So if you're somebody watching UJ, this is a good example of why FOMO can be really dangerous. If you're just chasing this move, you're like, oh, I'm missing it. I really want to be in on this. Look how fast it came back down to earth, right? I'm not personally bullish on dollar yen. I just gave that example because of how, sometimes when a market is seemingly never coming down, another one is like the NASDAQ. Like there will be some moments like this where you get rapid selling in the NASDAQ. So if you're somebody who wants to be long the NASDAQ, or you want to be, short something that's trending lower, like it's a good example of why, be patient. Oftentimes you will get your setup. And if you don't, you know, don't build the bad habit of like chasing something and because when it does have that serious correction, you get into a lot of trouble if you are not sticking to your risk management, so on and so forth. Anyways, let's keep going. I mentioned gold, so I have nothing to do on gold. There's no update for me on gold. If anything, I might trim my stop just a little bit more, just to right here. But what I'm personally looking for on gold, I'm long. I've been long since a couple weeks ago. This trade has been just moving nicely now in my favor. So I've just been trailing stops. I trailed, my initial stop was here, then I trailed it here. Now it's here. If the market keeps pushing and breaking through highs, then I'll look to, put stops behind higher lows. I'm trailing mostly on the 4-hour chart. So this is one where it is already making its move. I'm just trailing it and letting it keep going if it wants to. Silver is a trade that I'm in also. Silver is coming down, it seems like, to this level to retest again, that 30.4 level. This has been a really strong spot for for silver bulls. I'd like to see, if we retest this area, I'd like to see the bulls stay strong here and continue that push. If they don't, my stop loss is trailed for a reason. So if it comes down here and we don't see them bounce off that level, then that is going to be my cue to just take profits on this move. This is another one that I've been in for some time. And, my profits would not be very big on this trade. They would be bigger on gold. Silver, though, is just very volatile. So if it does bounce, the thing is, silver typically on a percentage basis can move a lot more than gold can. So I like both metals to the long side based on my bearish ideas about the dollar. FOMO is my forever demon. Stay patient. It's so truly me too. FOMO is the one that I struggle with the most. Because like when I'm in a losing streak, that's pretty painful. But what's maybe even more painful is when I had an idea, I was right about the idea, but I didn't get the entry, right? That's so painful. Yields are up a lot this morning. That is another thing. This is not good for my TLT position. So look at this. My TLT position completely reversed. I had a really good, looked like we were really going to see a huge breakout this morning. The yields world jumped up a lot. And what we can see here is I'm still in this position. I've been in this one for actually months. This is not a short-term trade. This is more of a position trade that I've had in the group for a long time. I've been sharing this one for months, but gold is more of a momentum trade. My NASDAQ position is more of a momentum trade. And dollar Swiss is obviously also a momentum trade as well. So I've got several trades that are working, just looking for more entries. I've just been struggling to find new entries because everything's kind of been trending well. But it's not a problem. Like I'd rather them keep trending, to be honest. But if I was not in these trades, I'd be admittedly very annoyed and frustrated to watch the market move on without me. So I understand people who may feel like they're in that camp. I've been there many times myself too. So it is part of the game to just have, periods of frustration like that. Anyways, what else can we look at? The euro dollar, Aussie dollar for the currency side. Gold, I'm still bullish, like I said. Dow Jones, let's look at the Dow. What is the Dow doing? Dow Jones. Look at this, guys. Very nice breakout. I actually put this in our Telegram channel this past week. we've got a huge level of resistance right there. And today, well, on Friday, we had kind of this weird close where it barely closed above. Dow Jones got back above 40,000. The question now is, can we hold those gains? And if so, any pullback, I'm kind of a buyer. I am a buyer. I'm bullish on the market. It is an election year. There's a number of reasons why I think that, stocks can keep going higher. Do I think that they're due for pullbacks? I sure do. But I've been kind of in the pullback camp for a lot of this year. I've stayed bullish, but that's been part of my FOMO struggles, has been a lot on the NASDAQ and S&P. I am long, like I said, currently XLK. This trade has continued to be just a monster. So I'll pull up XLK for us. XLK is a ginormous trade for me this year. It's just been a quiet, trend higher for technology this year. A lot of other things have not been working out nearly as well for me and for many other market participants, but technology has just been a killer. We're going into earnings season, which will either relight the flame for tech stocks or cause some struggle. Now, what do I mean by that? What am I talking about? Well, earnings season is when companies report their earnings. And what is notably the most looked at stuff is always the technology companies like Meta and Google and Amazon and Apple and all these big companies. People want to see what their earnings look like relative to what people were forecasting. Similar to like NFP or CPI, earnings season is just as valuable for many traders. So I too am really curious to see how earnings season goes this year. I, like everyone else, have high expectations for the NASDAQ. When you have the NASDAQ, making this kind of move, there's a lot of pressure for these companies to seriously deliver. Earnings season is upon us. It is a really, really key moment to see that inflation is coming down and the economy is starting to slow. So what you want to see is the U.S. companies also really deliver. So we'll see about that. Also, guys, I just wanted to announce we are doing something kind of fun this week. We are doing a discount off of our monthly memberships. We're trying something different. And if this is something interesting to you, if you would like to trade alongside myself and the rest of our team here at A1, we're going to do something kind of cool. We have not done this in a long time, and we're going to try something that might be beneficial to a lot of you guys. So check this out. I'm going to show you something really quick. So inside of the A1 Trading Discord, what we do is we share all of our trades, breakdowns, explanations. It's myself, Frank, and Ivan as well in there. We have 3 traders that are in there sharing their ideas. Ivan also does coaching webinars. And throughout the week, what we do is we share all the trades that we're taking. So if I'm taking a position on gold, if I'm trading the euro dollar, if I'm trading the NASDAQ, I share my full breakdowns as, all of my order entries, where I'm entering, my stop loss, my analysis for the trade, screenshots with the trade. I've shared this gold trade, everything that I show you guys on YouTube. I show all of the entries within the Discord. And we had an idea. We wanted more people to give it a shot. And the way we can do that is we can do a massive discount off of our 30-day access option. So what we're going to do here today is, while we are live, we're going to kick this off. We're going to do 30 days access, 45% off. So if you guys would like to join the Discord, here's how we can do it. James is going to drop the link for us. He's got us. He's the man in the booth. He can drop the link for us to our Talk To, which is our live chat support center. If you would like to try this out for 30 days, if you want to come join us, again, you might say, well, I want to see if it's right for me, see if it's the right group. Give us a shot. This is your chance to do so for a massive discount on the Discord group. You can see every trade we take. And more importantly, these are real accounts. No demos, no fake stuff. When I show you guys my positions, I'm showing you my hard-earned money being put on the line. So if you would like to see those entries, exits, analysis, everything with it, try it for 30 days, 40% off. I'm sorry, 45% off if you're watching with us live. So click that link, send us a direct message, and boom, bam, get 45% off the VIP membership This is just a short-term thing we're trying out. We want to let more people into the group, see if it's right for you. We're looking for more serious members. So if you're a regular, come join the VIP room. It is worth the money. I'm very, very confident in that. You learn a ton of stuff. There's tons of educational material. You can learn our strategies, everything and more. So there you go. All right, guys, real quick, we're going to take just a short break, and then we're going to set up the cameras, set up everything here while the break is happening for Ivan to join the call. So stay tuned. We'll be right back just after this. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right. I'm coming, Ivan. I'm behind the banner. We can move that around here in just a second. All right. Where is that? Oh, there we go. Thanks, James.
Oh.
Hey, Ivan. How's it going, man?
I'm doing good. I'm just. You told me to change my camera, like to fix my camera. So now I'm fixing my camera.
Your camera looks great. You look great this morning, and you're dressed up for the live stream. I love it. We've got great outfits on, and we're here to kill it today. So, Ivan, what's the latest? What are you watching today?
Oh, darling, you're so cute today. Thank you. Now, the cat falling. Hopefully, we have the CPI tomorrow for Canada. Then another one for New Zealand on Tuesday or Wednesday, and then another one for Euro, and then another one for UK, and then another one for Japan. So inflation is the word of this week, I think.
Gotcha. Yep. Because you had last time Canada put out their inflation, it was hotter than expected. So we're expecting, I've just pulled it up on the calendar here. We're expecting some cooling in inflation tomorrow from Canada. So yeah, that would be interesting to see where they're at in terms of, their progress on inflation, whether they're going to cut interest rates. So you think you prefer the Swiss franc over the Canadian situation?
Well, there is a lot of things I can do in my life. One is to choose currency pairs. So for me, dollar is like weird. Swiss yen's weak. Euro, well, okay, maybe I can choose euro, but I chose Swiss because it's seasonally supposed to be strong now. Hopefully that works out, and then I'm looking for New Zealand weakness. Hopefully, again, we're going to be lower than expected on CPI. That's going to make market go down because we're then going to be pressing in rate cuts sooner in New Zealand, and it all rains money down my account.
Sure. Yeah. Well, let's hope for NZD weakness on that note. Yeah. So this, I want to ask you too, Ivan, about the situation that happened this weekend. I was kind of breaking down the post, attempt on Trump's life, what it actually did to markets. And what was kind of interesting is, at least what I noticed, is that a lot of sites that track probabilities like odds for election showed a jump in the estimates for Trump winning. And whether that is, there's many speculations, but a lot of people were kind of like rallied behind that like attempt on his life kind of thing. And I think it's like martyrdom martyrs 101. They garner a lot of attention and a lot of emotions. So the market, it seems, at least, is reacting to that. Like the stock market jumped up, gold moved up, yields moved up. And again, like I said, one way that I can kind of confidently look to all the time is the solar ETF, TAN. So I'll show it on my screen just for a second. So TAN is a solar ETF.
Tan.
Yeah, TAN.
Like tan?
Like getting a tan. Exactly. Yeah.
Okay.
And so this ETF has been kind of one to watch for me, just because if Trump is reelected, some of the programs towards clean energy, speculators might say, oh well, that's going to get beaten up. So we see that down 4% here this morning. So I don't know. What are your thoughts on all that?
I had a rundown in the EAP a couple of minutes ago. So again, we're going back to my checklist of risk events. So where, who, why, what's the impact? Is there any escalation? So of course, it is a runner for the U.S. president, a former president that has been attempt of assassination. It's a big thing in itself, but does it have an economic impact? Not really. Does it have political impact? To a degree, but it doesn't have an escalation so far. The next thing is that he no longer is here. But we also had assassination successfully, unsuccessfully in the past. It's not a new thing, unfortunately, in the U.S. Present election situation. So to me, there's no more escalation. Dollar did rise higher, then came back down again. I said to the members that it is important to know that what drives market is escalations, and that's what you're going to go off, not necessarily the news event in itself. If it happened today, totally different scenario. Dollar would be rising very, very rapidly, very quickly, very high, and then fall down again. So yeah, it happened on a Saturday. Market had one day to think about it, and then it didn't really happen anything much.
Yeah, no, it's to your point there. Like if something had gone any differently, it would be a very different day in the markets. That's for sure. Because the question is, I guess, if you get a switch to Trump, what does that do to the markets? And people have differing opinions on this, but I was mentioning earlier that the market is really just one big voting system by itself. I trust the stock market and Forex market. I trust the movements there than I trust the news, because people will always vote the most intelligently and diligently with their money, right? Nobody wants to lose money, so people will drive their money into what they think is going to happen. And so there's a lot of very smart people that are making probability based decisions in the market. So again, at least today would tell me that the market thinks, whether right or wrong, that a Trump re-election, since the odds jumped at the same time, could be a bullish thing for stocks. One thing that I will tell you right off the bat here, Ivan, is so when we look at the NASDAQ has the concentration is super heavy on these ginormous, Apples and Microsofts and stuff. And one thing here is that if you get Biden reelected, he's talked about raising corporate tax for the big guys. And again, with leaving thoughts to the side or opinions to the side, that would hurt the income of those ginormous companies. So of course, just from a pure, how are the stocks going to react? To me, it makes a lot of sense that they would be a little concerned about those huge tax increases, and would be better, served in terms of making ginormous more money under Trump. So I don't know, that's the question. I'm not saying that that's what I think should happen. I'm just saying that's kind of how the market seems to be taking it right now. So in terms of the NASDAQ, we'll see if that kind of continues to cause this melt up to keep going or what. But the dollar is a little trickier for me, because I don't really know exactly. Can you give us a breakdown on what happens with the dollar on the election stuff?
Thank you for asking. Not only my professional opinion, by the way, but what we saw in the previous election, we saw that when Biden was leading, he was given dollar bearishness, and when Trump was leading, he was given dollar bullishness because of the risk it's applied while having Trump as the president, and not necessarily because of his policies, but more because of the insecurities he brings. Of all of a sudden, there's a new thing happening, which was, I think, in his presidency. Now, the question in mind that I think we really need to be going into is how likely is it that he's going to pass those taxes? Because who is running the House and who's running the Senate at the moment? Do you know that?
Sorry, say that again. Who's running the House?
Who has majority in the House and in Senate?
I believe that it is the. I get them mixed up. Hold on, I'm pulling it up. Someone in the chat help us.
I believe it is Republicans. On both.
Yes. Yep. That's right.
So if Biden wins, unless he changes the whatever, unless he changes it, how the current how it's put together at the moment, then it's not probable that that Republicans are going to pass through a tax increase. Therefore, that is not likely, and therefore, in my view, I would still bet all bears on Biden winning, because he has less, or what I would call personal risk to itself, to his presidency. Now, what would dollar do? I believe the dollar will do what it wants to do from August to November. Absolutely nothing. Depending on who's leading, we might get a trend, but after all, I think we're just going to be in the 300 pip range until we have it very clear who will win. But if now Trump win or leads with more than 5 or 10% margin on the polls on average, by the way, those polls are horrible, but from a statistical point of view. But that being said, when we get closer, market is going to lead into who is going to drive the market in the direction that who is most likely to win, and then when the election day comes, it's going to be very volatile, and then we're going to go for the trend. Then we're going to go for one trend, depending on who wins. If it's Biden, I believe bearish. If Trump, I believe bullish, based on past events.
Yeah, it's just going to be a very interesting time. I could say that much. Also, the VIX today, Ivan, is another thing to just keep an eye on. Jumping up from the lows down here at the high 11s, now getting up into almost 13 territory. And one thing that's cool about the VIX that a lot of people may or may not know is that the VIX gives you the market's expectation over the next 12 months what will happen with the S&P 500 index. So it's based on the futures and market, the options contracts. And so what we can see here is that there's a slightly higher expectation for volatility today. And I would not be surprised if between now and as election decisions come closer, that this actually does go up. Just because regardless of who wins, there's a lot of uncertainty that comes with it. There's a lot of people who don't know, if Trump wins, how does this change? And if Biden wins, these things will stay the same or these things will change. So there's a lot of uncertainty there. And that's part of the reason why I continue to like gold as well. So gold and the VIX could see further upside. But regardless, it almost seems like, whether Trump or Biden wins, the stock market at least thinks it's just going to go higher anyways, because both of them are very good spenders on their their track record has been very good at spending a lot of money, and spending a lot of money typically turns into stimulating the stock market as well. So I don't know. We'll have to see. What other charts are you looking at? You mentioned kind of staying away from the dollar. Are you looking at any Australian dollar pairs?
Yeah, also New Zealand would have been a I couldn't just find it. It would have been a perfect trade if I just thought about it a week ago, or 3. I don't know. What is that? 13th of June. That's a month ago. Sorry. That would be a very good trade. But right now it has gone. So at the moment, I'm trying to get like a pullback on New Zealand Swissy, or also something New Zealand related more than anything else, and not New Zealand yen, if anyone wondered. And also Euro New Zealand would have a nice pullback if it just came back down to 77.60 level. I almost got it on Thursday, but it wasn't deep enough, and I wasn't thinking about that. But I don't know. Is everything running away? I feel like it's like squeezing us. Is it called a swamp? like the thing that just attracts a lot of water, and you squeeze it, it releases all
Mhm.
the water, or like Jello. I feel like
Yeah.
I'm just squeezing Jello at the moment. Nothing sticks.
Well, I've noticed a lot of stuff, Ivan, on my watch list here. Like so many things. You just mentioned Euro New Zealand. Like this chart is beautiful, but the pullbacks, not just on this chart, but on so many charts right now, are just tricky to try and find. Like, let's pull up Euro USD, and you can see like Euro dollar. For me, I mean, if I am bullish on the euro against the dollar, I've got to see a break of this level. But look how it's clean on like lower time frames. This chart has been to the upside. You've got gold, obviously, has been rocketing higher. Than you have the Nasdaq, Dow, and S&P. We know what's gone on with those ones. Pound USD. I mean, look at the pound against the dollar. I mean, so many charts right now are giving FOMO a run for its money. We talked about that last week. You pointed out just like, what do you do in these situations? And they're really, in terms of an action standpoint, the only thing for me to do is manage trades that I'm already in and be patient for these trades to set up, because there's a lot of great moves that are happening, and if you're not in them, you can make dumb decisions trying to chase them. So we just have to yeah, we have a comment here. Maybe we can try and respond to this, Ivan, too. I lost $970 now. I have $30 left. How do I deal with that feeling? Ivan, what would you say to this lady or gentleman? I'm not sure.
That this is self promotion. If you are in VIP webinars, you can click the link to book a 30-minute free call with me this week. Secondly, you should reconsider everything you're doing, in terms of risk, in terms of strategy, in terms of whatever you're doing. So relax. You still have $30. That is good. We still have something to work on, but there's a lot of work to be done in terms of building that confidence up in the strategy and in the market and in the person itself, because once you have lost that confidence, it is very quickly down. So take one step at a time, start from the beginning again, and rebuild. But there's hope.
Yeah.
There's possibility.
Yeah, and that's the thing, is I think, to respond to these sorts of comments, first of all, let me say that Ivan and I have received, I know you feel absolutely terrible, and I'm not taking anything away from it, but you are not alone in that feeling. I get those kinds of messages every 2 or 3 days. So there are always people who are getting completely beat up by the markets, because let's face it, on paper, the markets don't look that hard when you first get started. Most people overestimate their own ability to be good at trading and investing, but this stuff is just immensely difficult. It is so hard to make money consistently in the market. So you losing a bunch of money feels absolutely terrible. I've been there. Ivan's been there. Everyone who has been trading for some time has made those kinds of mistakes. It just happens. You mentioned you over risked, right? So if you're somebody who has made this mistake, again, many people have made that mistake. But what you can do is you can say, okay, I lost that money and I will never do that again. I will never risk like an idiot. And again, many people make that same mistake. You risk too much, you learn a hard lesson. But the markets are not a place to make a ton of money from a very small account. That is what you won't hear in social media, because it doesn't sell courses, but that is the truth. Trying to grow a tiny account very quickly will lead you more broke than you started. But if you take the approach of, I'm going to do this for many years, learn this craft, dedicate my entire life to trading and investing, then you might stand a chance of making money. But that's about the level of dedication it takes. And if you're not willing to put that level of effort into this stuff, you probably should never trade again. That's my honest opinion. So, Ivan, anything to add to that before we move on?
I haven't made a video many years ago about how I started with $30 not because of me, but because a friend lost $250. Well, it was $250 and went up to 30. I'm like, cool, let me try and see how that goes. And that's where I started from. So that's where I started that account from. So it's definitely possible. I'm a living evidence of that. But what I want to say is, as who was it? Was it Lee who said that winners never quit, quitters never win, kind of a thing? You're still alive, you're still breathing. Yes, it's a lot of money. yes, it's a bad thing now, but if you turn into something positive, where you actually get a strategy done, you actually do things right, you can actually, in the end, regain. I'm not going to say you kind of regain that amount of money back, but you can get your trading back on track, because right now, I think we all agree that that's not how it's supposed to be, but
Yeah.
it's definitely possible.
Yeah, and that's the other thing is a lot of times when people lose an amount of money, they lose, oh, I've lost 1,000 or 5,000 or 10,000 or 50,000. They're in their head, they say, I'm going to work to get that money back. And I think that's a terrible, terrible mistake to make. You shouldn't, you've lost that money. It is gone. Say goodbye to it and accept your loss as a lesson. Like, I'm never going to risk like that again. That was irresponsible. I overestimated my abilities. I overestimated how easy it is to trade. You are literally competing. Someone said it in the chat accurately. Let me see. We're competing with the smartest people around the world. So we have to lose before we can learn and win. That's exactly right. I mean, who are you trading against? Who has the biggest accounts that are trading most of the volume on the markets? Very, very smart people that have computer algorithms that are crunching data all day long to beat you and take your money. It's hard to make money in the markets, and it's way harder than, you know, people showing Lambos and social media are telling you. They have never made any money in the markets. They're just talking big talk, right? I mean, maybe some of them do, but unless they show their brokerage statements, you should just, you know, keep far away from those sorts of people. Anyways, let's see. The Russell continues to push higher here. This would be a continued advocate, I would say, Ivan, for, you know, rate cuts. Is that the small cap companies are really having a strong rally here recently. You know, the S&P 500 is as well, but you can notice that the small ones are really doing quite well, which is suggesting that the more sensitive companies to interest rates seem to be pricing in rate cuts this year. Have we looked at the Fed Watch tool recently? What's the latest on this?
Definitely a rate cut in September, not in July, and maybe another one in November. But it's very close to the election, so it might be delayed until December. Sorry.
Yeah, so you've got by September about a 94.4% chance, at least according to the market, that there will be at least one interest rate cut. And the November, you're looking at a 97.9% chance that they will have cut rates once, but a possible 57.1% chance that they will actually have cut 2 times. So we'll see. Take a look at December even. And now you can see the probabilities even favor 2 rate cuts by the end of the year, just very slightly. So we'll see. Between 1 and 2 is sort of the consensus for now. And we'll have to see where that goes. But very interesting stuff. Yeah.
Yeah, I was about to say that I'm not bashing on gold, but in my reality, is that 70% of losses in someone's trading account is if they trade gold, it is gold. And the person apparently traded gold. So just saying that, no hate to gold, but it is. Is it a Widowmaker? Is it? I don't know, can we give it like a signature name or something?
Widowmaker is a fair one, Ivan. That it is a lot of people have lost a lot of money trading gold. It's the crowd favorite, but you have to be careful with the crowd favorite. I mean, it's one of my favorites too, but I've learned a lot of lessons trying to cheat gold, trying to be too smart, trying to be too aggressive. Gold can be a really great thing to trade, but if you are reckless with it, especially on FX brokers, which have like leveraged contracts on gold, you can blow. You know, that's another misconception about gold. People think gold is volatile. Gold is not volatile relative to certain other things. It is volatile when you have a leveraged FX broker lot size on it. Even a 0.01 is a good, you know, chunk of money that it moves. But in actual percentage basis, it moves typically less than like the NASDAQ or the Russell or something like that. So it is not actually that percentage based volatile. But again, people mess it up real bad because they over leverage, they trade it too aggressively. And gold is just I can't think of a chart that has cost people more money on my channel than gold or maybe US30. Those two are the culprits.
US30 as well. Okay, that's a new
Yeah,
one, but okay.
because US30 on FX brokers, that's which is a lot of what people outside of the US they trade on FX brokers. US30 has a humongous contract size, so even a 0.01
Okay.
lot size is ginormous. So, yeah.
Okay.
Anyways, Ivan, I want to thank you for coming on. And you did mention earlier that you're doing some free calls this week, right?
Yeah.
Okay, cool. Let's do that. So if anybody would like to do a one-on-one with Ivan, in fact, the person who is struggling with a big loss today, I would definitely recommend you take this offer. And maybe other people who maybe feel like they're in a similar camp and they're struggling in the markets. Ivan does periodically, generously, some one-on-one calls that are free for 30 minutes. If that's something that would be beneficial to you, there's the link. Check it out and book a call with Ivan. Ivan, thank you very much for coming on the show today, man, helping us out and getting us ready for the week. So we'll see you next time.
Thank you very much for having me.
All right. See you, man. All right. So let's see. What else are we looking at today? We've got the US30 well above its previous high. I'd love to see how that closes today. US30 is up 0.5% over the previous high. That is the Dow Jones making a push. And we'll see how stocks close today. We've just seen this monster rally recently. I'm still long on XLK, which is the technology sector, much of what the NASDAQ is comprised of. I'm also long gold. I'm long TLT, and I'm long silver. So these are all of my current positions. I have no other ones except for USD CHF, which is in a currency exchange, which I can't trade on Webull. But we will keep eyes on all of these trades. I'm just trailing stops on a lot of different moves, but I am looking for a few entries and maybe taking them. I mentioned this earlier. Real quick, we're going to take a break in just a moment. But before we do, we just kicked off a 45% off discount for our monthly memberships to the VIP room. Now, if you're somebody who would like to come trade with us and you'd like to see the trades that we're taking, the first thing is we don't show demo accounts. We don't show nonsense. We show live brokerage accounts, live US regulated brokerages. If you want to trade with us and keep it 100% real with you, come join us. It is a really good discount off of our monthly membership. You can try it for 30 days, see if it's the right service for you. But if you want to learn something, if you want to, get full breakdowns with every trade, this is what it looks like. I pulled it up earlier. Check this out. So we share all of the breakdowns, full explanations. These get sent directly to your phone and to your desktop. You can keep up with the trades that we're doing, when we take them, updates when we make them, so on and so forth. Me, Frank, and Ivan, who just left the show. So if you'd like some updates from us, get 45% off. We'll drop the link here in the chat to where you can speak directly with someone on my team to get set up with a membership. Don't miss that discount. Give us a try for 30 days. That's why we're doing it. We want more people to come join us and get involved in the group. And we're looking for serious traders who, are looking to learn something, looking to get involved. So take advantage. We just dropped the link there and you can get that 45% off discount. Okay. Real quick, we're going to set up again for our next guest. We got Diego coming back, which will be fun. So stay tuned. We'll be right back just after this. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show. All right, and we're back with Diego. He's back again. What's up, Diego? How are you?
Good day, Nick. I'm good. Thanks, and South.
I'm doing well, and it's good to have you back on the show again with us. People really liked your session last week. You got very technical, broke stuff down here, and so you're back. So if you'd like to share your screen, I'd love to kind of give you the floor here for a little bit to go through some of what you're watching here today.
All right. Let me just do that, and we here. And also thank you for having me. And I hope that everyone in the chat is also, you know what, you are all good and ready for today, as well as the topic that you guys just find yourself having like previously on when it comes down to the journey itself. I mean, if I can maybe just give my input as
Yes,
well.
please. Yeah.
I mean, for me, Diego, right, this journey has been, oh, it still is, right? It is still a challenging journey, right? There's so many things that I'm still finding myself learning when it comes down to the charts itself, right? Um, with me looking at YouTube itself and me just doing my breakdowns and giving my thoughts in general, you know, it's not just me sharing to the audience whatever I want to share to the audience, or you know what, Nick said this, so I need to also say this to do whatever, right? Or that trader said something and I also just need to say something. But
Mm.
I actually came to YouTube itself to document myself, right? Documenting my journey as a trader and everything that I am sharing, whether this is my shortcomings whatsoever, you know what, those are all me, right? Sharing it to each and every single one of you as well. So my challenges which I have and which I'm sharing on how I'm overcoming them, right? You guys just need to find yourself taking that into consideration, and you know what, just do what you need to find yourself doing as well, right? And when it comes to trading itself, that's why I only have two pairs on my watch list. I only have the DXY and I only have the NASDAQ on my watch list, simply because, you know what, previously I had a whole lot of currency pairs as well, right? Which I found myself trading. I had GBP USD and AUD USD, which was basically the pairs that I'm mainly focused on as well. But as time went by, I realized that, hey, I it's almost like a this is gonna be like most probably like a little bit weird, but you know what? It's like being in a relationship, right?
Mm.
Every pair has their own thing. That's just how I look at it.
No, it's
And
true.
you know, and based off Nasdaq, I had an actual system, and I found myself applying it, and I've been sharing it on the channel like for the longest right now, right? And I saw that, okay, Nasdaq is doing A, B, and C, and I found myself just making use of that and just stick with it, right? So I came up with a plan, and every day I just found myself taking a trade, right? One trade or two trades at max. If I take a loss, cool, I took the loss, right? Nobody inside this market is just taking W's on W's on W's on W's on W's.
Yep.
44 wins. Right? No one. You are going to find yourself taking losses as well. And just like Nick just said, right? If you take a loss and you do know that you were in the wrong, you took ridiculous risk on your trade, then you are in fault, right? Nobody else should be blamed for it, right? And on this journey, like risk, that is the one thing that you need to find yourself like always taking into consideration, right? Because if you can just risk a little bit and make a little bit as well, you know what? It's all about survival, right? Take the little
Yes.
chunks and you know, just do what you need to find yourself
Yeah.
doing.
No, well said, Diego. And that's the thing is it is a journey, it is a process just of learning something new each day, something, and like you said, finding what does and doesn't work for each person. I mean, some people just prefer to trade indices, some people prefer trading gold, but there are many things that are applicable to different markets. So what I'm going to say is for now, I'm going to leave the show with you, Diego, if you're okay with it, give you a chance to walk through what you're looking at, share any lessons that you'd like to share. And then we will join back with you in just a bit. So before I step out and give you the floor, Diego, everybody who's watching, if you guys would like to check out Diego's content, he's got his YouTube channel dropped here in the chat for you guys if you'd like to check him out. And Diego, you've got the floor for a little bit. Enjoy it, and we'll see you back in just a bit.
All right. Thank you.
All right.
Yes, and I see like the English. Are you from Cape Town? Yes, I'm from Cape Town. Yes, I'm from Cape Town. All right, so fam, listen, I'm gonna start off with the DXY, right? And once again, this is simply just my outlook and what I'm having my eye out on. Right, the New York Stock Exchange is finding itself being like in the next 10 minutes whatsoever, and I am expecting some longs on Nasdaq, right? But to start off from the DXY, right over here on the daily time frame, right, I'm still having my eye out on these lows which we have found ourselves creating, right, as I am looking at some relatively equal lows as areas where we do have liquidity resting, right? So if we can find ourselves having that dip and have that shift towards the upside, that would be great, right? So on the DXY, I basically want to see price take out these lows first, right? So with that being said, I'm expecting price to have some sort of downside momentum, right? So scaling to my 4-hourly time frame, just looking at market structure on the 4-hourly, that we can simply see that we do have this beautiful lower low right over there, and then we find ourselves creating some equal lows right there as well, right? So with us basically creating some equal lows, I would still like to see price basically take out these lows as well. And with me basically just saying what I'm saying, all I'm saying is that I want to see some downside on on the DXY, right? I want to still see price have some sort of initial push back down, at least taking out these lows we have found ourselves creating just by moving with market structure as well, right? High, higher high, lower low right over there. All right. And we can see that price is looking like, this is the impulse correction for the next impulsive shift back towards the downside, right? So on the DXY, I would like to see price take out those lows and then have some sort of initial overall move towards the upside as well. As you know what, on the weekly time frame, I will only consider us basically being bearish if we are going to find ourselves having a closure for this week below these lows we are find ourselves creating right over there. All right. So if I can maybe go to my NASDAQ, right? So on the NASDAQ, we can see that on the weekly time frame, right, I am looking at the NASDAQ as being overly extended, right? We did find ourselves having this higher high right over there. So as you guys know, after price is creating some sort of an actual higher high, what are you expecting price to do? You are expecting price to have some sort of an actual shift back towards the downside, right? And how I'm basically looking at price is that these down close candles Nasdaq is finding itself creating, right? I look at them as BOBs, like order blocks whatsoever, right? And I'm looking at them as basically being a correction on a lower time frame, right? Which is an area I would love to see the Nasdaq head back into, right? For those who were in the live session, in the first live session we find ourselves having, or which I was in, right? I always say that I'm looking at magnets, right? Or I said that I looked at magnets, and magnets are basically untested areas, which is which is like this, a BOB. Once we had a closure above, price never came back into this candle, right? So I'm basically looking at this as my BOB. So I'm expecting Nasdaq to have some sort of initial push back into this candle we have found ourselves creating right over there, right? We can also see that we had a beautiful rejection as well. So that is pretty clean right there, right? But as we do know, when it comes down to price, we need to create some sort of a wick, right, before having some sort of a shift back to the downside. So on the daily time frame, we can see, check this out. Can you guys see that we had another actual bearish candle to the upside, right? We had a closure above, price came back for the retest, price had some sort of a reaction from this area onwards, right? And me, Diego, I am basically looking at this area, or this candle at least, to at least fill up this wick we have found ourselves creating right over there, right? So I am expecting some bullish momentum on the Nasdaq as well, right? So I would actually like to see some beautiful longs opening up on this beautiful pair called the Nasdaq, right? Now, when it comes down to our H4, H2, H1 time frame, this is basically where the decision making comes from, right? What can we expect? What can we expect? So check this out, right? Check this out. If I'm just gonna remove that right there and just zoom price a little bit in. So on the H4 time frame, what can we see? Would you guys say that we are bullish, or would you guys say that we are bearish in structure when it comes down to our H4 time frame? What do you think? Do you say that we are bullish? Do you say that we are bearish in structure? What is your thoughts? What is your thoughts, fam? What is your thoughts? Let me know. So if I'm just gonna find myself looking at the highs, right? Check this out. We do have that high right over there. Price had a beautiful shift to the downside. You know what? We created some sort of a correction right over there and had a further continuation move back towards the upside, right? So price is clearly bullish, right? With us having that higher high right over there. So if I can maybe get out my Fibonacci from the low to the high, just like that, right? We want to see price basically go from from a premium to a discounted area, right? And we can see that price actually came back into a discounted area. And you know what? We can potentially see price have some sort of an actual push towards the upside, right? We can potentially see price do that. Okay, so H4 time frame, we are bullish in structure, right? When it comes down to our H2 time frame as well, right? My H2 time frame, I will still consider it as being bullish in structure, right? So H2, we are bull. 1 hourly time frame, you know what? We are quite actually bearish, but you know what? I will still consider as, you know what, wanting to see those beautiful longs towards the upside. Okay, now scaling to my lower time frame. Well, before I'm gonna do that, let me just box out my major areas of liquidity first, right? And how I basically just box it out is by simply just looking at some turning points like that, right? Which will basically be my sell side. Buy side will basically come through right over there. Okay, buy side will basically come through right over there. So let me go to my 15-minute time frame and see what's happening over here. So 15-minute time frame, check this out. If I can make this location, we find ourselves, we can see that we did have some sort of an equal low right there. Price came back into the area. We had a beautiful shift to the upside. And currently, you know what, we do have a little bit of back and forth right over there. However, you know what, I am still prepping for some beautiful longs to find itself opening up on this beautiful pair called the NASDAQ, right? Now, what I like doing is also look at my midnight candle. Where's my midnight candle? Right over here, right? Right there. So if I can get out my foot from that low, which we had over there, that little correction to that high, we can see that we are inside a discounted area as well, which is basically an extra confluence for us to basically look for some beautiful long opportunities. Okay, so we do have 1 minute left for the New York Stock Exchange to find itself opening up. Right now, this is the interesting part. Over here, we do not have an actual entry just off yet, right? Price need to find itself opening up something for us first before we can basically look for those beautiful long opportunities, right? And currently, nothing over here. So let us wait. So what I would like to see basically happening on this beautiful pair is the following, right? If we can find ourselves having some sort of a push towards the upside, right? Having some sort of a closure above this candle right over there, right? I will consider this as being my breaker, right? So this simply means that then I would then find myself just looking for some beautiful, you know, long opportunities. You know, just something like this. Maybe we can have something like that happening, right? Looking at my highs, let's see if it will work. Can we get that opportunity just like that? Yes. You know what? Something like that, right? And fam, listen, you know what? If you are wrong with your actual trade, you are wrong. If you are right, you know what? You are right whatsoever. one bad trade. Don't stress about it, bro. Don't stress about it. It's something like that. And you know what? If I get stopped out, I will just simply find myself looking on taking another extra long opportunity over the course of, later onwards today. Bull on the next candle. And what is your guys' thoughts? What is your thoughts? What is your thoughts? What is your thoughts, fam? What is your thoughts when it comes down to the NASDAQ? Is there maybe anything else you would like me to look at? You know what? Even though this is the only pair which I'm finding myself trading, I'll still find myself looking at something else for you guys as well. What is your thoughts when it comes down to this beautiful pair called the NASDAQ? You guys are long. You say you guys are long. Listen, and even if we are going to find ourselves having some sort of an actual closure below, right? Below this actual area right over there, there's still a high possibility for us then having that actual continuation move to the downside, right? Basically something like that. So, and if you find yourself having the actual L, you know what? Don't beat yourself up, fam. Don't beat yourself up. You do not need to beat yourself up. If you take the L, cool, bro. You want me to check EU? All right. EU, you want me to check? Let me check. I'm gonna check that for you now, right? I'm gonna check that now. Fam, listen. So what I will find myself doing now is basically just close a little bit on my profits, right? I'll close a little bit on my profits, and then I will get to EU. All right. Let me just take a little screen like that. All right, so I close some and I will put my trade at break even. You know what? Worst case scenario, if price is basically going to find itself coming back to my break, come take me out at break even, right? I still find myself closing off my day as a W, right? So you need to find yourself at least securing something, right? So let us look at EU. Let us look at EU, Euro, USD, Forex. Let's look at EU quickly, right? Let us look at EU, fam. Let me just get out the chat over here. All right. EU, let's see what's happening. Let's see what's happening on the daily time frame. Wow, we actually have a nice little push to the upside. So on EU, I actually be bullish, right? Let me just start off from the weekly. Let me start from the weekly and let's see what's happening over here. All right, just give me some time, fam. Just give me some time. Okay, so what I can basically see over here is that we do have some sort of an actual trend line, descending trend line, right? Which we basically had an actual closure above, right? So can we basically see price have that actual pullback for a further continuation move back towards the upside? High possibility on that happening right there, right? I'm just monitoring my actual trade right there, and my break even have been smacked, right? So weekly time frame, we are bullish on EU, right? Let us look at the daily time frame. Daily time frame, as well as we are overly extended towards the upside as well, right? So there is a high possibility for us to actually have some sort of a pullback, right? So preparing for some shorts on EU would be my thoughts, right? Over here we can see some beautiful equal lows coming through as well. So there is a possibility for us basically coming to this area in the long run, right? But if price would have to find itself having that shift all the way towards these equal lows, right? Price need to find itself having some sort of an actual proper change in market structure, as we do not have a proper change in market structure just of yet, right? So it's a proper market structure change will basically be maybe something like that, right? Lower lows being created, we need to find ourselves having something like that, right? But as if now we are still bullish, and I would find myself actually looking for some longs when it comes down to this beautiful pair called the Euro USD. All right. I would still be looking for some beautiful overall longs on this beautiful pair called the Euro USD. So you close half of your profits, but you didn't close half when it was floating a loss. No, I didn't find myself closing when it was floating in a loss, right? If we're gonna find ourselves basically taking out my stop loss, then cool, we're taking out the actual stop loss, right? We take the out, right? But with me closing half of my actual trade, I'm perfectly cool with that, right? I'm perfectly cool with that, because I'm still finding myself walking away with something. What about gold? Let's see what's happening on gold. I think gold I have over here as well. Right, if I can maybe just do that. Gold bull. Gold bull. Gold bullish. I think Nick, you are doing quite well on this actual trade right over there. Gold bullish. Right. Yeah, if we can find ourselves having a closure above this down close candle, just like I made mention, like on the Nasdaq, right? How I look at it is that once we have like these, like check this out, right? Check this out. Look at, we haven't found ourselves coming back into this candle right over there, but check this out. We created one there, right? Bull, bay, bull. Box it out. What did gold do? Gold literally came back in, and we had an actual shift to the upside, right? So price literally respected that actual this BOB we have found ourselves creating, and we had some sort of a reaction right over here as well. Price created another one. Price literally came into this area, had a beautiful shift to the upside, respected this area as well, right? So on gold, you know what, how I'm basically looking at it, if we are going to find ourselves having, or if we can see a closure above, you know what, this bullish candle right over there, you know what, I would just look for a continuation move back towards the upside. However, if we're going to find ourselves just fluctuating right over here, there's a high possibility for price to at least come and fill up this week. We have found ourselves creating right over there as well. All right, but overall on gold, right, bullish. I am still bullish overall on gold. So you think gold is still bullish? Yes, I am saying that we are still bullish on gold, and I'm also thinking that we are still bullish on gold. All right. All I'm just saying that is that if we're gonna have a closure above this down close candle, we can potentially see an actual further continuation move back towards the upside. No problem, no problem. So I re-entered on the Nasdaq on a nice little low, right? And currently we are floating back up quite nicely, right? If we maybe can go back to the Nasdaq. The Nasdaq, right? Look at that. Look at that. Beautiful, beautiful, beautiful. Look at that, right? Look at that. Beautiful, beautiful shift to the upside on the Nasdaq. Where can I learn Forex for beginner? You can find yourself learning that on YouTube, my brother. Or, well, my sister, you can find it on YouTube. You can find it on YouTube. Just search it. As well as, you know what, Nick's channel, my channel as well. All the stuff that you need, you know what, is literally there. All you need to do is just search for it. Nasdaq is cooking deep in blues. Facts. Facts. USD cat. Let's see what's happening on the USD cat. All right. Are we like going down there or some? Let's see. I'm happy. I'm happy. I am I'm happy, fam. I am happy. Let me quickly do something. Right. Let me just quickly do something before continuing. Just have to do that and then that. Beautiful, beautiful, beautiful. I'm happy. I'm happy, fam. US cat, let's see. We have actually created like a nice gap, right? A nice gap. I'm just looking at the chat on my phone, fam. I'm just looking at the chat on my phone, okay? Are you in South Africa? Yes, I'm from South Africa. Okay, so you is cat. You know what? Let's see what's happening over here. We're actually not down, right? We're actually quite up. Let's see. Let's see. Let's see. Area of liquidity has been violated. That I can see. All right. Slightly violated it. So I would consider them as basically being some relatively equal lows right over there. Right. That is already tested. This is a proper. So on US CAD, we are actually bearish, right? With us basically creating that beautiful, beautiful low right over there. Okay. So H4, let's see. H4, however, we are bullish. That H4 time frame, we are bullish, as I am basically looking at it like this, right? Over here, right? Then we find ourselves having a correction. Price had some sort of a consolidation, and we find ourselves taking out liquidity right over there as well, right? With us basically having a closure above this body, that basically changed market structure, you know what, from this bearish market back into a bullish market, right? And just by zooming price in just a little bit, that we can see that price actually created a fake out right over here as well. So with us basically creating a fake out, that's also a signal for us basically, you know, changing market structure from bearish to bullish, right? And we can see that we basically came back into that region right over there, and we had a beautiful shift back towards the upside, right? A magnet which I will basically look at would be this this up close candle we have found ourselves creating right over there as an actual, you know what, a target or a potential target to where we can potentially see price head back into, right? So structure, if you're going to find yourself moving with that, you know what, we are bullish. We do have this up close candle right there, which is serving as a magnet for price to hit back into. All right. Ooh, look at that. Coming back down. All right. And can you see the importance of at least securing something? That liquidity taken, and then we had that shift back down. Clean. Clean. All right. Any other questions? Any other questions? AUD in the D, right? AUD in the D. Listen, fam, like my 30 minutes is done. Should I like continue, Nick? Or what's happening? Or can I do the breakdown or should I just continue? AUD in the D. I can go there. AUD in ZD. Let's see. Let us look at if you'd like to join soon. All right, cool, got you. All right, looking at AUD in the D. Wow. Hey, yo, this chart looks tough. This chart looks tough. Back and forth like forever, huh? Back and forth like forever, huh? Look at that. Look at that. Wow. Back and forth like forever. Yo, who's trading this pair? How many people are actually trading this pair? Do you trade news? No, I don't trade news. I, however, do look at news as an actual beautiful choppy. I do look at news as a factor that will go hand in hand with your technical analysis, right? So if you are bullish, right, news events will basically come and just take out some sell side liquidity, take out liquidity, and then move overall direction. So I just find myself looking at overall direction, right? And after the news event, if the price find itself giving what it needs to find itself giving, right, then I just take advantage of price, right? But at the moment, at an actual news event, I don't find myself doing that. I don't trade news events. All right. Weekly time frame over here, I can see a nice swing low, swing high, well, swing low, and then us creating that actual higher high, right? So if we can potentially find ourselves having that shift towards the downside, as we can see, price is quite overall bullish, right? We are creating that actual higher high. So you are expecting price to have some sort of a pushback down, right? So you are expecting price to have some sort of a pullback. This is the weekly time frame, so it will basically take some time for price to have some sort of a pullback, right? Looking at the daily time frame over here, right? The daily time frame, we can also see that we are overly extended towards the upside, and with us basically being overly extended towards the upside, we expect price to have a pullback, right? Do I consider this as a proper correction? Yes, I do, right? Here we can see that we do have one down close candle. Do I consider that as being correction? No, right? Here we do have one down close candle as well. Do I consider that as a proper correction? No, right? Over here, we can see that we had two consecutive down close candles. Do I consider that as basically being a correction? Yes. Right? Yes, I am. So if price can basically find itself having that actual shift back towards the downside, have a closure below, then I would find myself looking for some beautiful shorts, right? But as if now, even though this market looks quite tough, you know what? We are still somewhat bullish in structure as well. All right. So on AUD and ZD, you know what? We are still somewhat bullish in structure as well. All right. So yeah, you know me, I just follow market structure. I just go with what the trend is basically telling me. Oh, so handsome. Oh, all right. Thank you. Okay, down to sport. Yes, sir. Of course, who does not love biryani? You know, if you know, you know. If you know, you know. Love biryani. Love it. What's your opinion on AUD USD? All right, let's see. AUD USD. Looks like we're gonna have a shift to the downside, but let's see what's higher time frame telling us. How come I have a drawing there as if I oh it's AUD USD. It is AUD USD. I used to love this pair, fam. I used to love this. I honestly did. So on AUD USD, you know what? I do look at us as basically being bullish in structure as well in overall, right? This is the monthly time frame, fam. You know what? This is the monthly time frame, right? So looking at structure, right? With us basically having a closure above this body right over there, right? If I can maybe do this with us having a closure above that body, you know what? That to me was already a signal that, you know, we are bullish in structure. Once again, if you're going to get out that foot from that low to that high, just like that, right, you can see that price came from that premium area back into a discounted area, right? And currently, you know what, all we are finding ourselves doing is just simply moving with the actual impulse. So I'm looking at this as being the impulse. That first target will always be like the 0%, right? Which is coming through at 0.68683, right? And extension target will then basically be these highs, which we have found ourselves forming right over there. All right. So monthly time frame, we are still bullish, right? And if I can maybe do the following, right? Check this out. Can you guys see that this is the correction, right? And this is an odd candle within that correction, this bullish candle right over there. So with us basically having a closure above this area right over there, can you guys see that we came back into this area for a retest and then we had the shift to the upside, right? That right there is also serving as a BOB, or you can just simply look at this as an area of demand as well, right? Which is basically changing market structure in my eyes as well. So you know what, we are bullish on AUD USD. However, weekly time frame, we are overly extended to the upside as well, right? So can we basically see that actual push towards the downside, a pullback towards the downside, something like that, right? Wait for some sort of a market structure shift whatsoever for a potential continuation move to the upside. High possibility for us basically doing just that as well, right? Daily time frame on AUD USD, we can see that we have been bullish for quite a while, right? Bull, 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 bull. I'm looking at this as like a run, right? If you're gonna find yourself just running, you're eventually gonna get tired, isn't it? You're eventually gonna get tired, isn't it? So all I'm waiting for is for price to just have some sort of an actual change in structure, or all I would wait for is for price to have some sort of a change in market structure, and I would then find myself looking on taking some beautiful, beautiful shorts on this beautiful, beautiful pair called AUD USD. All right, market's looking crazy. This market is looking crazy as well. Interesting. What do you think about it? All right. So yeah, we are overall bullish. How are you guys doing? How has your day been? You guys having a great day? You having an okay day? You have how's it?
Hey, Diego, how's your day been?
Is it? How's your day? And you see this NASDAQ little back and forth. But ultimately, you know what? I heard someone coming through.
Yeah, hey, can you hear me, Diego?
I can hear you.
Hey, yeah, I wanted to thank you for coming on today. I know that it went a little over 30 minutes, but I hope you enjoyed it.
No problem. I thoroughly enjoyed it, my friend.
Yeah, we've got our next guest coming on, so I'm going to go ahead and let you go. We appreciate you coming on today, and we look forward to seeing you back next week.
Thank you. Thank you for having me on your platform, and to the chat. I hope you all have an amazing week for the onwards. Trade safe, use money management. Much love from me. I'm out.
Yeah, I'm going to drop your YouTube in the chat right here. One more time, guys, go subscribe to Diego if you enjoyed his analysis today. He's one of our newer guests that we've got on, but we really appreciate him joining. Diego, thank you again. And right after this quick video, guys, we're going to transition on over to Chris. So yeah, let's see which one are we running here. All right. So yeah, Diego, thanks for coming on today, guys. Right after this, we're going to be right back with Chris.
Thank you.
If you're looking to add fundamental analysis to your trading, then look no further than our software tool, the EDGEFINDER. The EDGEFINDER allows traders to approach the markets by simplifying fundamental analysis into simple scoring systems. We look at economic data, technical readings, as well as sentiment analysis like the commitment of traders data to help traders spot potential opportunities in the markets through the use of data. Our tools allow traders to find top setups each and every day from the top setups page. You can also browse the latest institutional money flow through the commitment of traders data report that we've generated to make it very easy to read. And on this report, you can see everything from the latest overall net positionings, as well as the week-to-week buys and sells from institutional money. The EDGEFINDER also has a retail positioning tool, which allows you to see what the crowd is thinking about your favorite charts, symbols, both currencies, commodities, and indices. You can also check out the latest seasonal trends, month to month, week of the year, and much more to spot potential opportunities coming up in the future. The EDGEFINDER also makes economic data much more easy to read, like our GDP charts, our retail sales numbers, PMI data. We can also check out the jobs data, unemployment claims, and so much more. At the touch of a button, you can check out the latest reports from the economic data that moves the markets. Right now in the live stream chat, we'll be dropping a link where you can speak directly to a team member about getting yourself set up with a copy of the EDGEFINDER today, and we'll give you a nice live stream discount. Click that link and chat with the rep to find out what kind of discounts are going on right now. Now back to the stream.
Hey everybody, happy Monday. How we doing? Just getting a trade in on the IWM. I'll share that with you in just a moment. I have 2 more accounts to fill, so let me get this trade in. And last one, I'll share the mechanics of the trade here in just one moment. How's everybody doing? Hope you all had a good weekend. Last week was a pretty crazy week. I think that's pretty safe to say. All right, so IWM, we'll talk about that in a moment. I'll go through all the charts that I'm interested in. Just had a chart alarm go off on Ford. We're trading at 14.39. I want to take a look at that also. I own shares around like $9. I've owned it here in this little consolidation between $12 and $11. Use options pretty actively to lower the cost basis. So I'm okay kind of letting the price go. But if we came back up and to fill some of this supply zone around, $14.75, $14.80, $15 to me would be a nice kind of target to go after. I'm not trying to hold on to Ford to, $25, $26. I'm good literally flipping it for maybe $3, $4. Let's go to IWM. And we're trading at 215.74. So the trade that I just took on the IWM, and I'm going to jump into my spreadsheet here as well. And I also want to center a trade on the SPX today. So SPX around 56.40. We gapped from 56.15. I'll go ahead and center it here around like 56.30, 30. Okay, 56.30. Let me get a trade on this one. So 56.30. It's going to be a 0 DTE. 56.30. If I center it there, I'm just looking at deltas. So if I did like a 12, I'm going to go out a little bit further. So a 12 delta, it's on the low side. It's 10 a.m. So 56.70 down here at 12 delta, 5600. I know it's typically I like to go, maybe 15 or 16 delta, but I'm going to try to stay out of the way, get this trade in profit, 355 credit. But if I spread it, let's go 20 points here and 20 points here. So 250 on the credit. So that'll be tracking for today. 7/12 was Friday. And 7/15 is today. I'm centering around 56.30, which means I'm selling the 5600 by 56.70. Okay, that's for $2.50 credit. If I take the trade 2.50 times 1.5, I'm looking at about a $40 profit. So 210 is going to be my debit on the day and go after 40 bucks. I did take, so far doing this type of trade, the win-loss record, I've had 3 losses and 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 wins. So 16 winners, 3 losses. Let's do the math on that. So 16 out of 19. Right now, hitting about 84% strikes of wins. I need, 250 or 245 credit to give me about $30 to $40 of profit. Just a little daily income there on the SPX. IWM, let's go back to that for a moment. IWM is up here at 216. So what I just did, I'm going to actually go back to the SPX on this chart and then go over to the IWM here at 216. So what I've positioned for on the IWM, and I have quite a few positions running here. So I'll show you, here's IWM right now. If you can see my numbers. So IWM currently is up around 4 grand on the day, around $8,600 in the portfolio. And this move is just getting started. I've been positioning for this kind of out of the way, out of the money credit spreads, bull put spreads, some leaps on IWM to stay above certain levels or rally. And so I'm getting a little bit more directional now. And so the trades I just filled for everybody is the following. I'm going out to February of 2025, and I'm putting on basically a combo debit spread. So what I'm doing is this. I am buying the 240 and 245 call. Okay, so the 240 and 245 call, and then against that, I'm selling the 270. So I'm willing to kind of cap my upside here, but 270 is all the way up here towards, that's a 25% rip on this instrument. And I know we could get there, but I think realistically for me, I would just be happy to see if price is going to get to these all-time highs. That's what I'm positioning for. So I'm out of the money. This debit spread is not that expensive. I only paid about $7.45 for it. And I'm giving myself $25 and $30 of credit potential. So here is a February 2025 expiration. I have the 240 long call. I have the 245 long call. And it's against that, I'm selling a 270 sell call. So the other way to look at this would be it's a 240 by 270 bull call spread and a 245 by 270 bull call spread. That makes sense? So my net debit, $7.50 debit. And then I have $25 to $30 max credit on the trade. So right there. So what I'm looking at is, will the IWM be the catch-up trade that I think it's capable of doing? I looked at this when we had that rip in Q4 of 2023 into this year. The Russell was only up about 1%. Okay, now it is up like 6 or 7%. It is coming back in a pretty big way. And all I'm looking at is it's been here. If we are going to see the Russell or the small caps catch up and try to hit all-time highs, that brings, broadly, we could see the S&P higher, we can see the NASDAQ higher. But if this is the, trade that was up 1% for the year, this is the trade that was up 4% for the year, this was up 18%, this is up 25%, there's that catch-up potential on IWM small cap that I'm trying to take advantage of. So I like the positioning for it. My profit's going to be around 10 grand if I'm right, only about $1,400 if I'm wrong. I think that's a pretty good upside potential to take away. Okay, so that's my plan, IWM. I'm going to actually post this in my trading room right now. I don't have a live session for Equities on Demand students today. And James, on your end, I do have to bounce. And I know I never say this because I'll just stay until you guys pull me off. But today I do have to leave at the top of the hour. So if you have another guest coming on at 11 a.m. Eastern time, great. I'll wrap up my session right around then. So, okay, let's have a look here. I'm going to jump into my Telegram channel I'm going to post this trade. So 240 by 270, 245 by 270. I paid $7.50 on the debit. So right here, new trade, IWM, and it's a February 21st. So February 21st, 2025 expiration, buy 240 call, sell the 270 call, and then buy the 245 call, sell the 270 call. It's a combo debit spread. It's a bull call spread, 750 debit, 25 and 30 max credit. The play is for small caps to catch up to large cap and hopefully outperform and allow the IWM Russell 2000 to revisit all-time highs. Okay. So that's a trade from Equities on Demand, a trading room. All right, that's IWM. Everything else is looking pretty decent. You know, I've got my way out of gold, so I'm still long on gold. I'm just going to go through. So my Pulve report here, I built this watch list. This is a really easy way for me to kind of get top-down analysis. You know, things I'm watching this week. Okay, last week was really crazy. I just finished a live session, so I'll repeat some of that stuff. But I hope you paid attention to last week and kind of what matters in the short term over the next couple of weeks. We hit five all-time highs last week in the S&P. That's insane. Monday was a brief, barely carved out an all-time high. Tuesday, barely carved an all-time high. Wednesday was a directional day, carved out an all-time high. Thursday, gapped higher on CPI, faded hard, but still technically hit an all-time high. And Friday's recovery trade hit an all-time high. That is a lot of crazy stuff going on here. And does it mean that there's more to come? Maybe. Okay. I still stand by the outlook of, I think we're overextended. I think a correction is needed. We are now through an interesting phase of data. We've gone through some US news where the market's expecting a rate cut. Okay. In fact, I did see something that was changing quite a bit. The Fed Watch tool has changed to now a probability of a rate cut in September, in November, as well as December. Okay. So let's take a look at that CME Watch tool for a moment. You know, we're sitting here near all-time highs. My little red line that's attached to price, those are all overextended conditions. I see a lot of divergence on daily and weekly timeframes. I see overbought conditions on the relative strength. Again, I see them. It doesn't mean that we're going lower. The last couple weeks especially, what am I doing? Well, I am trying to trade some positions where this up here is a broken wing butterfly where it's all calls. So if price goes higher, I have this thing trapped for profit. Okay, so I have credit here. I have my 10x trap right here, and then I have my risk. I'm giving myself the ability to let this price for the next couple weeks out to the 26th or out to the first week of August. Hopefully, if we're going to drift higher, I'm trapping some profit there, and I can maybe turn what should be a high probability credit into possibly like an 8 or 10x return. On the downside, if we have something that turns the market south, I'm very hedged to the downside to make sure that I don't give up any of these gains I've had this year. I'm just playing defense. I'm not turning bearish. I am not bearish. In fact, I think if anything, from last week to over the weekend's events, I think the market has turned maybe slightly more bullish because the decision for maybe who's going to be president, what administration comes in, is probably looking more of a probability. I think the Trump polls were showing a favor of like 59% probability of him getting the presidential vote, and now it's up to like 71%. So if that's the case and it's a Republican sweep with Senate, House, I mean, this could be great for equities. It could be bad for bonds. It just depends on how the fiscal policy plays out. I don't think the Republican Party is going to be showing austerity measures. I think they're going to spend just like they were spending back in 2016 to 2020. My biggest concern would be deglobalization with a Republican sweep. And on top of that, probably, social reform would probably be an issue with Republican sweep as well. But, I don't trade politics. Okay. I mean, I trade policy, but we could see some interesting developments there. But if the market likes a certainty or higher probability, we might see the markets moving in a favorable way. So all-time highs, are we just going to continue to stretch and never pull back? I don't know. I think technically we're due for one. We clearly saw the markets were willing to jump. Like Thursday last week did show a potential rotation that was like sitting under the surface, and last week Thursday was the opportunity for the market to then start to do it. Apple's made a big run. We're at 3.6, 3.7 trillion on Apple. Now it's way ahead of Microsoft, way ahead of Nvidia in a big way. And so now you're stacked up 1, 2, and 3, Apple, Microsoft, Nvidia for your 1, 2, 3 market caps. This week in earnings, Netflix is one that I believe that's still a top 10 in the S&P. We have some consumer ones with United Airlines, some American Express. We have some home builders with D.R. Horton. We have some material plays. Alcoa has earnings this week. So there's 116 stocks reporting earnings this week, which is not nothing. We were in the 10s and 20s and very little the last couple of weeks as earnings season wound down, or was winding down rather. It sounds better. And here we are, 116 just to kick things off. So we had some financials last Friday. We have Goldman Sachs. We have Bank of America, Morgan Stanley, Charles Schwab this week to kick things off Monday and Tuesday, and then get into kind of the meat for more earnings. So I do want to look at an earnings play on Netflix. Let me see if I can price this out with you. Options slam. And let me get logged in here. Nope, it just freaking pulled up the website. You sneaky turds. All right, so get logged in here. All right. So here's what I'll do. I'm gonna log into Option Slam. I'm gonna take a look at Netflix, but I'm going to go through my kind of top-down weather report for everybody. Just give me 1 second. Slam. There we go. Okay, so I'm in, and Netflix. All right, so here is what I'm looking at. Google purchased company in Israel for $23 billion, WIZ. Yep, I saw that this morning. All right, Netflix. So the nice thing here is we do have some good volatility around Netflix. You can see some big prints. The average print is around 12.88%. That'd be my expected move. Let me take a look and see what Tasty has measured here for the IV rank. So IV is at 80.2, which is pretty solid. If I go to trade here, we're expecting a move of about, let me go to maybe next Friday on Netflix. So they're looking for about a $60 move over the next 2 weeks, right? So this is an IV rank of 80.2. The IVX is 69.3%, about a $60 move. Now, I'm going to calculate it kind of my way. I know the ATRs have been pretty solid, but with earnings, there's always chances for big jumps. If we go into Netflix right here, trading around 662, we open the day up around 646. It's already up $16 for the week. The weekly average is $37.20 on Netflix. Okay, so Tasty's platform with expected moves around $60. I'm going to calculate it out with my earnings here. Now the last, I'm going to go 1, 2, 3, 4, 5, 6, 7, 8, 9 earnings. I see that we've had some around the 10%. So 9.4 to 9.92, that's sub 10%. We had a 10.46, 11.8. I'd say to be somewhat safe on this trade, I'm going to calculate out what's a 10% move to an 11% move. So if we did 10% and the stock's trading for 662 right now, 662.86. We're looking for about a $66 move conservatively. If we hit 11%, so $66 is pretty safe. $72 is up there. And then if we hit the actual average at 12.88, 12.88, I'll go 12.5 to be, again, just a little conservative at 662. So anywhere between like $66 and $82 on Netflix. So about $66 to $82 expected move. Okay. So what I'm going to do for my trade is I'm looking to see if I go out to next Friday, and I'll price this out two ways. If I went out to this Friday, the 19th, which is right after earnings, Netflix earnings is Thursday after market. So I'd only have Friday to manage this trade. All right. I'm going to go out a little bit farther just to be on the safe side, because if we have we don't have a big immediate reaction, then I don't love the trade. But if we do have an immediate reaction, at least I have some time in my side. In addition to, if we have a lull or a lack of movement, maybe we have some more follow through going into next week. So if I go out to the 26th, which is next Friday, I'm going to try to sell like $60 in the money on some of these credit spreads. All right. So we're trading at 663. I'm just going to say 720. Okay. 720. If I do an in the money bull put spread, right there, that bull put spread for it's a $5 spread. I could collect about $3.50. That's not too bad. Okay, 3.50 minus 5 or divided by 5, I can collect about 70% of that max spread in credit. So I like that trade. Okay, here I'll do another $60. I'm going to take this down to $600 and do a bear call spread. There. So for this trade, I'm only risking about $2.40 or so. I'm going to try to get $7.50 on the fill. Okay, $7.50 on the fill. Earnings wise, if I'm looking at I'll take two contracts here. I'm going to try to get $7.50, and the goal is this: if I can collect $7.50 up front, and the trade hits an expected move, then this $7.50 credit will probably quickly turn into like a $6.50 debit or a $6 debit. And I'm looking just to take a little bit off the top. I'm not trying to make the full $7.50 credit, or in the event of one losing and one winning, taking a $3.50 credit net. So the result is this. Okay. If I have, let's say $3.50 credit, okay, on the winning side, that means I'm risking about $1.50. All right. So if I have one winner and one loser, where my winning side I make $3.50, my losing side I lose $1.50. If I have $3.50 as my winner and $1.50 as my loser, I still walk away with $2 credit. Yes or no? Right. Now that's if I go all the way to max profit. Now what I really need to see here is if I do this as a trade as a whole with all four legs, as long as I see a $7.50 credit that is trading for less than that, I'm in profit. So if I see this trading for, what is happening with this price? That credit is way higher now. That can't be. There's no way I'm gonna get filled on a 750. 750 is reasonable. 914, there's no way. The spread is getting pretty wide. So let me see if I can get 750. I guess I'll try, something ridiculous like $8, but let me find out. So if I did the 720 by 715, 720 by 715, and the 600 by 605. No, I'm just gonna. I think it's not fudge. It looks like 750 might not be filled right now. So let me try 750. Hopefully, I'll get filled. That was easy. All right, 750 got filled. That's good. All right, let me fill these up for my accounts here. There we go. And next. Okay, a couple more accounts to fill up. And last one. There we go. So that's a 715. So I'll do all this. I'm going a 720 by 715 and a 600 by 605. So this is a 726 expiration. Netflix earnings play. And I got filled for $7.50 credit. So my goal on this trade is if I can take that 750 credit and let it deteriorate and decay to maybe $1, $1.50 net profit. That's really it. So if we have a ridiculous move on Netflix, awesome. If we have an as expected move on Netflix, that's fine too. I don't have a lot of risk on the trade. So basically I'm risking $2.50 to make a net. Well, I should say, look at each individual trade. I'm risking $1.50 to make $3.50 or more. Actually, I'm making $3.75. So that's not a bad way to play it. I've got plenty of buffer on the profit side to make net profit. Okay, Cedric says it looks complicated for. It's not. It's not. I mean, I promise you this. If you come into these live sessions and you spend some time with me, you'll see me do the same thing over and over again. We have some teaching moments. I'll break down the trade. All this is trading options. So here's another way to trade it. Okay. The other way to trade it is if you want to spend a lot more money, I'll show you how to trade it that way. So if I go into Netflix and I say, okay, I'm going to buy a call on Netflix. You know, the earnings is Thursday after market. I'm just going to buy a call. Well, if I bought a call right now on Netflix expecting earnings to be great, a call option at the money is going to cost me $28.75. Now, here's a good thing. If the expected move is $60 and it's $60 to the upside, if we get a $60 move on Netflix by Friday, when it opens up, I can take a $29 debit and turn it into a $60 credit, which is great. The problem is if it goes to the downside, I'm going to lose on that trade. Okay. So if I want to do, okay, I'll trade it both ways. Well, now if I trade it both ways, you expect to see about a $60 move, and now I'm going to have to pay $57 to trade both sides. So it's more expensive. There's more risk on the table. And I just don't love, putting all of this risk right up front on a, 1 day management. Because if I did this out to the 19th, that's all I have to manage this trade. So that's not the route that I'm going to go. Okay. If I do it a way that I like to do it as well, which would be I go one strike out, and I'm long in that capacity. And then I sell against it around the expected move. So 665, I'm going to go up, let's say I go up, $80 and I'm going out farther. I know I could sell the $60. Let's just figure it out. So if I sold $60 against that, 665 to 725, okay, and then 660 down to 600. Oops, that needs to be a sell there. So I can take what's expected to be about a $66 to $82 move. I'm giving myself, there's no way that's right. That's not right. I'm capped around $6,000 of profit. Okay, but I'm risking $51. So that max profit is incorrect. Is that? Let me double check something here. Oh yeah, that needs to be a sell trade. There we go. Okay, this is now correct. So what I'm getting at here is if I go $60 up, I can get a $60 credit on a trade that's going to cost me $40. So do the math on that. If I go $60 credit and I pay a $40 debit, that gives me a net 20 credit, right? So I can make max profit of $2,000. Okay. But my max risk on the trade, if price does not go to the full 66 to 76 to 80 some dollar move, that risk is on the trade. So I'm risking $4,000 on the trade if I did one contract. I just think that's a little much. I'm not willing to throw that much risk out there for a 1 day trade. So I'm going to use time, and I'm going to use the efficiencies of the market to forecast the expected move. And I'm looking to see if we can, in fact, get that 60 to 65 to $70 move. And what we have seen in the past is we've seen Netflix blow through earnings positively and negatively and have $70, $80, $100 moves. And if it does that, great. And you kick yourself like, oh, I should have gone long. But if you don't want to throw $4,000 at a trade, don't. There's other ways to trade it. All right. So anyway, it's just an earnings play. All right. There's other ones that I'm going to figure out. But to me, this is pretty cost effective. If I'm right, great. I'll make probably $400. If I'm wrong, fine. I'll lose $300. If I'm right, actually, if I want to hold it to expiration, if I'm right, I'm going to make about $1,400 and lose about $300 if I want to hold it to expiration. But the reality is I'm probably going to take a 650 credit and go after a percentage target. So if I have a 750 credit, okay, let's take a 15% take profit. If I made $1.12 in this position, that's hitting a 15% take profit, right? So I mean, a lot of times with my earnings plays, especially when they're very black and white and binary, if I'm doing 15%, 25%, 50%, those are all very mechanical ways to set profit targets. So if I make $1 and change, that's a good win. If I make $1.50 to $2, that's a good win. And just let the process add up, because I take these trades quite a bit. Okay, in my my trading room so far this year, with a lot of earnings plays, we're at about a 72% win rate, which is not bad for earnings. And we've netted close to like $5 of net credit. So if you're in one contract, you're up $5,000 for the year. A lot of times I'm taking 2, 5, 10 contracts, so adds up pretty nicely. All right. Anyway, got a trade in there on Netflix. I'll post that in my Telegram channel for my traders as well. Let's talk big picture here. Let's talk. I've got this little Pull Report watch list. This is what I'm going to be watching this week. Okay, so it's 10:28. I centered a trade around the SPX this morning for about $2.50 credit. Right now, that trade is showing 220. I need this to get down to about 210. So we're pretty close. If I get this credit trading down to 210 or 210, 205, then I'll grab my $35 to $40 profit out of the trade. That's the idea. I think we're going to stay there for the morning. I think in the next maybe 30 minutes, that trade's going to be a winner, which is solid. But what I'm watching for this week, this is the SPX. I've got that chart alarm. I'll move this down here to that low. And then on the SPY, chart alarm set both ways. So do we, tap the high, tap the low, watching to see how the probabilities play out with those breaks this week. If we're struggling, let's say that we're very quiet today on a Monday, and we have directionally like a Tuesday, Wednesday. I mean, do we poke the highs? Okay, what does that mean? Well, if we poke the highs from last week, the probability is that price does not close below the low, or price does not even come back to test the low. Okay, so why am I watching this really, really carefully? Because if price doesn't do anything this week, that's still a low probability. Okay, the highest probability is price wants to test a high or test a low week to week. Like 60+% of the time we're testing highs. 30% of the time we're testing lows. Only about 12% of the time are we going to, test the high and test the low. So that's not going to happen very often. Or 12% of the time we test the low and test the high. Not going to happen. Okay, it's low probability is what I'm saying. So why am I watching this closely? Because if we stay sideways, sideways, sideways all week, it's just an indecision week. Everyone got all excited last week, making 5 all-time highs, which is insane. But I still look at the technicals, and this is what I was saying, I think, in the first 5 minutes of our session this morning. The market now has enough information to digest a couple of things that are really important moving forward. Okay, the Fed keeps saying the same thing, but the market keeps looking at a higher probability of a rate cut and now additional rate cuts. Okay, so did the market use all of its power to price it in last week with the SPY making all-time highs again, the Qs making all-time highs, but that aggressive sell-off on Thursday, it just showed that maybe large cap is going to underperform small cap in the next 5 or 6 months. It's very possible. That's why I put on the trade in the IWM. I'm going to take a chance in the IWM for roughly $10,000 of profit for about a $1,500 risk. I think that's a pretty good trade. That's asymmetrical to me. Anytime I can get 2, 3, 4 to 1, I love those probabilities, or I should say love those odds rather than the payouts. It's just a risk. It's still less than 1%, but that 1% for me that pays maybe 3, 4% is pretty good. Okay, so I'm watching these levels carefully. If we are not really getting any directions, this is what I'm going to keep an eye on for the week. Let me go into my other software here, see if I can get some levels. Here's a gamma level to watch for. and I'll see if anything pops up here this morning. I doubt we're going to get some big directional trades today, but here we are in real time. So let me get a number on this gamma squeeze. So 423, 351. All right. So I've talked at length about this with my trading rooms. I mean, this software is allowing me to get a nice visual roadmap where price can gravitate towards. I wouldn't be surprised if price is able to find, this level here, this level here. Price is clearly, 60 to 24 calls versus puts. Does it, break and go to crazy all-time highs? I don't know. I mean, to me, I'm looking at these levels. They're there. They're small magnets right now. But what I'm going to wait for is when these gamma levels get up to, let's say, 1,500 to 2,000 net. So that's essentially it's a combination of, institutional order flows, hedge levels, and open interest. If that all happens, I mean, those happens intraday, those happens in real time. Yes, like last week, for example, when that Thursday sell-off happened, I had a big level right down here, and I took this trade. You can watch it. You can watch the recording of it. I had a level at 556. Okay, and so I put in a 557 put, and I captured that sell-off, and I took profit. I did about a 65-cent debit that I closed out for about $1.80. So almost a 2 to 3x return on that position. So when it lines up really nicely, these trades are fantastic. So I try to be really patient on this stuff because, especially going single direction, 0 DTE, you have a lot of risk on those trades if you're wrong, but obviously some profit potential if you're right. So
Hey,
I see
Chris.
Frank's in the room. He's ready to jump in here for about 20 minutes with me. What's up, dude?
How's it going?
Good,
I took
man.
your
How are you?
spot for like 30 seconds.
You what?
I took your spot on the screen for like 30 seconds.
Oh, I don't care.
Hope you don't
sent
mind.
me- All right. All good. What's up, man? How you doing? How's the weekend? What do you want to trade today? I was just talking about some short-term opportunities. I'm watching the high and low from last week's SPY. Did you know, Frank, that we had 5 all-time highs last week in the SPY?
I kind of, every day it was like an all-time high. So,
Exactly.
except for Thursday, that was actually
Well, it was an
no,
all-time high because
it
it opened.
hit an all-time high and then came
Yep.
2% back.
Oh, I know, and
Yeah.
that's what's funny though is like we know that it was a terrible day on Thursday for the sell off. I mean, SPY was down 1%, Q's down 2%, but the fact the market notched an all time high, that technically you got to give it credit. So 5 all time highs is pretty impressive. But one thing I want to mention right here on the watch tool, this has changed a lot in the last couple of weeks. The market's now pricing in that we might have 3 cuts coming by the end of the year. Did you see that?
3.
So,
I did not see that.
3. So check this out. So initially, this goes back, we know that this changed from about 50-50 to now it's 88% that the Fed's going to cut in September. Powell's, 2-day testimony last week didn't change this probability whatsoever. This is likely going to happen. The market's expecting a cut in September. So if they cut in September, cool, it's kind of baked in, priced in, but this is what's changed. Look at the November. Another potential cut.
Yeah.
56% probability going to December for 450. So you're at 4.5% with another 52%. So this market is now looking at 1, 2, 3 cuts, which I do think, I don't know, man. I mean, maybe the Fed does, but if we cut 3 times in 3 rate decisions in a 4-month period from September, there's no October FOMC, but if we have September, November, December, and this market is pricing in, and the market gets 3 cuts in 4 months, I do think that runs the risk of the Fed breaking something. I don't know, man. It's a lot of cuts around an election cycle. I think that makes it a little wild.
Actually, at first, the first rate cut when we were talking about it a few weeks ago, just seeing 1 seemed dangerous.
Yeah.
But now we're seeing 3.
Yeah.
It's hard to come up with some sort of justification, I guess. But if inflation continues lower with these cuts, I don't know, maybe Powell might be, I don't know, maybe they know what they're doing, but I'm not, I don't know. I'm not in support of a rate cut yet. I like what the UK did, where they got to their 2% goal and then they held rates because they wanted to see how if it was sticky or not.
Right.
But here maybe we're just cutting with falling inflation rates, and maybe that's good. I don't know. The fact that we're pricing in 3 is pretty ridiculous.
Yeah.
But yeah, we'll have to see it. It's very strange now that we're at 3 versus the 1 that might have come in September.
Yeah.
Do you think that's because though the odds of a Trump presidency has increased as a result of last Friday? And when he was president, he was an advocate for keeping rates as low as possible. Do you think maybe this is something that's going to, even if we don't get cuts this year, do you think that's going to be a potential issue in the future where, we'll get ultra low rates again, even with
it's very possible. I mean, so I don't think that the CME watch tool nor the Fed can price in right now. Why would they price in 3 cuts when we don't technically have a president? Like, we don't technically have Trump as president. And so I could see these forecasts changing, right? Where it's like,
Right.
oh, if Trump's president, like I could see that changing going into 2025. And look, the probabilities jump from about 59% to like 70+% as after this weekend. If we look at probably the biggest mover in addition to rates would be the dollar. I mean, if we're going to see a weaker dollar, that's how the stock market's going to go higher. And how do we get a weaker dollar? By slashing rates like crazy. So if we're looking at a 200 basis points difference from the Fed going from 5.5 to 3.5 over the next year and a half, that is a lot of weakness in the USD. But the one thing that it is, yes, we could have a weaker dollar, but does that necessarily mean that our globalization is going to be increasing? Because I think one thing with Trump in office is it's not globalized; it's deglobalized. We'll tax, we'll tariff, we'll weaken our dollar. We want the best of everything, but I don't know. I don't think we have the best trade relations or globalized trade relations with Trump in office. So, and again, that's up for debate. Some people like the fact that we get taken advantage of and all these trade deals or whatever, but it just seems like it's more closed borders, more nationalistic, and we want, I don't know. And if we want to make more money internally, we want to manufacture more. It's not going to be with people. I think that's the maybe the scary part that people don't realize is if we're going to increase manufacturing and be this hub and we're going to make everything ourselves, the U.S. makes semiconductors, the U.S. makes cars, the U.S. does. We're doing it with automation. Like jobs aren't necessarily coming back in a big way. All the jobs that have been created this year have been government jobs and service jobs, right? And we're seeing service PMI going down. So I don't know. I mean, one thing that we've mentioned here the last couple of weeks on the show is we're ticking up in unemployment, right? 0.5%, 0.7%. Those are not bad numbers. In fact, I was in Chicago this weekend, Frank, and I watched The Big Short again on the plane. And when Brad Pitt's character is Ben Rickert, right? When he was talking about, did you know that for every 5% employment, 40,000 people die? He told the guys to freaking stop dancing, when they're in the casino.
Yeah.
So, I mean, we're in that stage where it's like, look, people are losing their jobs. The labor market's softening. And yet we're sitting here celebrating it like, oh my gosh, finally this relief. I mean, those jobs don't necessarily come back, right? Corporate America is greedy enough that if they want bottom line, they're going to automation. They want to do more with less. I mean, that's how shareholders are happy. That's how investors are happy, because you have to do more with less. If you want to keep beating expectations and getting revenue, you got to find a way to cut expenses. So anyway, I just don't think
it's kind of a dire
rosy picture. I'm not getting doom and gloom. That's silly, because we're probably looking decent for the next couple of months. But look, the rate cut stuff, I just thought that jumped out of nowhere. That's very different than last week to see that the market's now anticipating another November and December cut. So
he's talking today, is he not? Or
Powell?
he already did?
Who?
Powell is talking right now, I think.
Okay. I don't know. I don't know what.
Sorry. At noon, he's talking.
At noon,
he does some open Q&A, I guess. But
all right,
yeah,
he's not going to say anything different, dude. That
he's
guy.
Not, so I don't really understand what's going on with the forecast then.
Yeah, I don't know either.
That must have changed overnight or something.
It changed over the weekend. Yeah. So, I mean, I read this morning all that like opening bell higher was, Trump trade. Well, okay, fine. But, we also had rate cut trade, and that's been kind of pushed in last week. We have Trump trade now. It's like, how much higher can this market keep pushing up? Like, it's not real. We're pricing in things that might be happening, might get a rate cut, might get Trump as president, might get better CPI inflation data, might get higher, softening labor market. But we have until September, by the way, we still have August. And so what we don't see right now is if we go to a calendar and we go into August CPI data, which I'm not sure what the date is, but I'm pretty sure there's no forecast for it right now. Let's go to next month and see when it actually is lining up. So let's go next month and look at August and look and see when is the US CPI. Because right now I'm looking at US CPI on the 13th of August. Jackson Hole is going to be towards the end of the month. There's no forecast on CPI, but I can probably assure you of one thing. If we don't come in with that CPI, or that's PPI on the 13th.
It's the next day on the 14th.
So we're going PPI first. Okay. So CPI is on the 14th, my fault. I can say with a little bit of certainty that if we don't come in lower than 3.1, this market's probably going to have an adverse reaction to that inflation data. And therefore, everything we're talking about right now, these rate cuts and seeing all of a sudden September, November, and December, that can change. So I still think the Fed is data dependent. I think the Fed will completely push back on cutting rates, I think. I don't know. I mean, if the Fed cuts rates to the end of the year and they do cut September, November, December, they're cutting rates for probably a Trump presidency. I mean, after what has happened over the weekends, I don't think that the Democrats have a chance to win at all.
I saw the odds increased of his of the likelihood that he's president.
Sure. And so there was that discussion of, if the Fed cuts rates, that will help the economy, boost the markets, and then maybe the current incumbent stays in, Biden stays president. That's not going to happen. At this point, I think the country feels pretty let down that, a guy that's 80 plus years old with likely dementia, likely something of that capacity, is lacking the lucidity to be our president. It's just not the same. And so if the Fed was going to try to cut and be a political play to help the incumbent, it's not helping, because right now those odds are so much in favor of Trump likely being the winner. And I wouldn't be surprised if it's a landslide. It's rough, but it is what it is. So what does that mean? It's going to be interesting to see the popular vote versus electoral college. But I think after this weekend, the presidential election it's kind of a wrap.
What do you think that means for the markets then?
Well, same thing we just talked about, dude. Trump comes in as a Republican, and what is the Republican Party likely going to do? You're going to be looking for tax rate cuts or tax cuts. You're going to look for deregulation. You're going to look at deglobalization. You're going to look at weakening dollar. You're going to still look at a ton of fiscal policy and fiscal spending. So weaker dollar, higher markets, rate cuts, better profits for corporations, top down, trickle down economics, whether that's good or bad. Look, if you own assets, Republican Party is going to help you, right? In my opinion, that's how it's always been. The inequality and the spread from those that have those that do not. I mean, these times in the market where assets go up, okay, the stock market is the ultimate hedge against inflation. Well, if our inflation data is truly going to still trend lower, those that have will see assets continue to go up. I do wonder what happens to the housing market, because if we see rate cuts, that's probably good for the consumer, for corporate debt. I think that's good for refinancing. I think that's good for housing. And so, the consumer can still get there, but we're at an all-time low in affordability. So that does change things quite a bit. I mean, if you look at we talked about this last week. If you look at a mortgage calculator for a $500,000 house, the difference between a 6.95% interest rate or a 4.95% interest rate, there's a big difference of whether you can afford that house or not. So again, 2%'s out a year plus. So it's not like immediate cuts in September is everyone's buying houses again. But if people are buying with the intention of, oh, I'll refi in a year, refi in 2 years, you're going to overstretch for a little bit, but you're hoping that rates get better. So,
which I mean, the rates could get better if they continue to cut, but
yeah,
if we get that increased spending and there's more money circulation and the consumer's back, inflation is not going to go down. So then we run into that same problem that we did a few years back. So I guess what I'm kind of trying to figure out is, do you think that we are really going to see like I guess Tom Lee talks about how inflation is going to drop significantly, almost suddenly, I guess.
okay.
Or is that necessarily true? Because if we have a flooding of demand back in the housing market, what is that going to do to inflation? And honestly, I don't think it's going to help it go down if that's the case.
Yeah, that's a good question. I mean, for the housing market, I mean, the one thing that the US has that other countries don't is we truly have a 30-year fixed mortgage. So that's a lot different than Canada, where you have basically a variable rate every 5 years and you're refinancing at current rates. Like if you have a fixed mortgage, that's why right now, like that's why that's why these markets have been resilient and sustaining with household numbers. Like household wealth is as high as it's ever been because everyone's home is 25 to 50 to 100% more valuable.
Yeah,
Which is insane because I mean, I don't know let me see if I had a screenshot of this. I think I took a screenshot of this, but it was something on the just the pacing of like, let me see. I think I took a screenshot of it. I hope I did. All these screenshots. There it is. Okay. So price changes from 2000 to 2024. So let me just rattle some numbers off here. In the last 4 years, all right, hospital services have gone up 256%. This is more expensive. Okay. College tuition has gone up almost 190%. College textbook, 158%. Childcare and nursery school, 140%. Medical services, 135%. Average hourly wages have gone up around 118%, which is great. Okay. But it's not outpacing the things I just mentioned. Food and beverage has gone up 100% in the last 4 years. Okay. New cars have gone up 24%. Household furnishings up 15%. Clothing 1%. Cell phone services have decreased. Here's your deflation, Frank. Cell phone services have decreased by 42%. Computer software decreased by 73%. Toys down 74%. And TVs down 98%. Everything else is more expensive. We're at all-time highs. I wish it said houses, because right now you look at housing markets, 25, 50, 100+% upside. Okay. Now our wages, average hourly wages for 4 years, 118%. They're not catching up with houses, right? House prices that have doubled, it's like that's a 200% increase. I mean, our wages are not keeping us up with. Example being, if you bought a $500,000 house in 2020 compared to a $500,000 house today, that's a very different house. Have wages gone up? I mean, Frank, have you seen a big increase in wages? Have you made 100% more money in the last 4 years?
No,
I haven't either.
no one has.
Most people haven't. So, I mean, to see that and see that stat, it's like, well, I didn't double my salary. I mean, maybe from the lowest end earners have moved jobs, switched jobs, taken on more gigs, and they're making more money. But it's not exactly mapping out to be like, oh yeah, that makes sense. Like everyone can afford expensive houses now. It can't. So inflation wise, I mean, I think that there's deflationary pressures, which are good. I think if the consumer just stops splurging and spending, inflation pressures come down. I think if our food prices and energy prices remain flat or stable, then inflation pressures come down. But I think the big inflation came from the government giving money out. That's really the big jump. And to say that, like, congratulations, everybody's got $600 or $900, that didn't do shit for anybody. But the fact that the government did that and spent X amount of billions of dollars to do that, That's where inflation came from. And we're still seeing that going through the system and still having to play out through the system, where that's how we got to 9%. So, I mean, I don't think we're doing another round of that type of stimulus. So it's just, I don't know, man. It's
a mess.
It is a mess. And look, the debt issue that everyone keeps talking about, this debt bubble for the US, is probably not going to change. You know, it's going to be a debt problem, but what are we going to try to do with it? We're going to try to grow it. We're going to try to outgrow or outpace our debt. If we can have debt at X amount of percent, we can outgrow it because our GDP is at 2, 3, 4%. Maybe we can outgrow it. If our rates are at 5.5% and they drop to 4%, what's that help the Fed do? Not pay 5.5% on short-term treasuries. Not pay, on the lending rates. It's like the Fed's not going to be responsible for, trillions of dollars in paying back freaking debt. So, and at the end of the day, as world reserve power and central bank, it's like all this stuff can be reaccounted for. I mean, I'm sure the central banks have all sorts of creative accounting plans where if the proverbial shit hits the fan, there's ways that we can write off debt, or the Fed can absorb it, or the government can absorb it. But right now we have a government that's spending with a Fed that's trying to be tight, and it's just, and everything keeps moving. So, I mean, there's no, I think this is a reality. There's no ceiling in place and there's no floor in place. It's just, everything is a moving target, right? Our inflation's a moving target. Our all-time highs are moving targets. The day-to-day movements and everything's a moving target. So the best we can do is just keep navigating to keep things probabilistic. As a trader, that's all you can do. So anyway, that's a, little segue, but I just think it's important to note, who knows? I mean, if the market gets ridiculously excited, here's a good probability for this week. If we crack the highs again this week and we do it today or tomorrow, probability is we're going to stay higher for the week. I
think we just did.
Well, I've got the SPY right here. We're not at all-time highs yet.
Oh wait, hold on. Yeah, you're right.
Yeah, we're close.
We're getting close again. That Thursday drop was such a blip.
Yeah.
I was wondering if that was just a small taste of what might happen. I don't know what that was, because they said it was a rotation, but I mean, we're back to where we were. So
I know.
It
was. Yeah. Is it? Well, here's what is this a, one, is this a bear market? 2, is this the the correction? 3, is this the large cap to small cap rotation? And the reason I say that is because if you compare the difference between the Russell and the SPY on Thursday, I mean, the Russell was up 3, 4, 5% last week. Everything else was flat for the week. The SPY came ripping back on Friday in a ridiculous fashion, actually cracked the highs again, and then faded aggressively. Here we are back up towards the highs. So it's not a bear market. A correction would have been a single day correction. And here we are talking about the SPY at a 1% correction, Frank. 1% is not a correction, dude. And 1% I don't think is a full-on rotation. There's still a lot of people buying Apple. There's still a lot of people buying Tesla. There's still a lot of people buying large cap, but I think that what maybe, I don't know, what's the COT show? Is there anything with the EDGEFINDER for Russell? You guys have the Russell right now?
Really quick.
Administrator showing for smart money.
Yeah, give me a minute on that.
Okay.
Because the week before, actually, money came back into the markets. What looked like a rotation out of it ended up being, I guess, almost a false alarm. But let me show you. This is COT this week.
Okay.
So they're getting out of tech and S&P and Dow. Meanwhile, small long positions on the Russell. And Nikkei is back up, which was like, it was like one of the most heavily sold for like 3 weeks or something, and now it's back up here. I kind of like the Russell trade. I think you and me talked about this before. That would be kind of like a catch-up trade.
Yep.
With the rest of the market.
Yep.
But I was happy to get out of my queues. I was in triple leverage, and I was like, okay, we're pretty high now. I'm glad I trailed out, and then it went to like 84 or something, and I got out like 70 something. So
Okay.
it's like they just keep running higher. But I'm in I own this ETF in my Roth. So this has been doing well. I don't know if I'm going to sell it or not, but I do like the upside potential on small caps this year.
Mhm.
Hopefully this back half's gonna be good, but
Sure.
it's kind of just been, very unexciting.
I mean, well, it was way less exciting for the last several months on the small caps, and just in the last week, it's gotten way more exciting. I mean, dude, the Russell's up 8% in the last like 3 trading days. So
Yeah.
I am hoping that technically this is a decent breakout. So I don't know if you tuned into the session earlier when I jumped in around 10 o'clock, but I have a position on the Russell that right now my Russell trades are doing pretty well. I'm sitting here. I've got about almost $8,500 in profit on the Russell right now, and looking for more. So let me see if I go into just go into positions here. Here we go. So my IWM's up about $9,700. So there's another, I mean, up $5,200 just on today's trading. And a lot of this is, today's a good P&L day. We're up again. My longer term trades, I've got a lot of ratio spreads, bull put spreads, and naked puts on the IWM. So a lot of those are now, because price is going up, those are all looking higher probabilities for profits. I can probably start managing some of those early if I wanted to, but I think if we're going to go up, those are probably looking better for expiration. The trade
Did
that
you get signed on any of them?
No, because all my ratio spreads were out of the way. I mean, I was doing like out of the money bull call, credit spreads or ratio spreads where price had to come down way, way, way farther. So my DIA, my IWM, my Qs, my SPY, my Apple, my Google, my Microsoft, none of them got assigned. All my ratio spreads were looking like for full profit. So
Cool.
yeah. So really quickly on IWM, I took this trade this morning. So it was fairly inexpensive. Okay. I went out to February of 2025. So I'm giving this market the time to catch up. I'm giving this market, the end of the year type Q4 rally. I'm giving those open interest levels and those big gamma squeeze levels in December to in January. We have this thing in options called Vanna charms. And so if those are all like hitting those big, big targets, like the SP at S&P at 6,000 or the SPY at 600 plus, the Russell, if we just look at the all-time highs, that was at 244. Okay, we'll call that 244. So what I did was I did a 240 and a 245 long call. Now, those are out of the money, and historically, they finish out of the money. 73% of the time, they're going to finish out of the money. However, if this is going to catch up like we did on that rip in Q4 of 2023, the Russell can go way faster than the SPY and the Qs, right? Like, I mean, this thing went up 30% compared to like 18 to 19% in the other indexes. So if we are getting this rotation and this is truly going to be a breakout trade, then I'm looking at this as over the next 3, 4, 5 months, if we're sitting at all-time highs or close to the all-time highs, to me, this is why the catch-up trade looks so attractive, because it's measurable. You can see all-time highs right here on the chart. Look left, and if that's where the market's going after for a destination, look, I'll take the fact that it's a lower probability trade, but if it pays me, it's going to pay me about 4 to 1. So I'm risking about, $1,400 to make about $9,000. I'll take those odds on a setup. And again, could I be wrong? Sure. But I think if we're going to get a catch-up trade and truly get it, the risk reward is in my favor.
Yeah, no, I'm in agreement with you. Hopefully we do see it back up there.
Sure.
But we have James coming on at 11, I think. So
Okay, that's cool. I
think we're
got to
gonna
run.
go
I got to take the little Frenchy boy to the vet. So I got to run here. But I'll see you guys later.
Poor guy. All right. Thanks for hopping on.
All right. Thanks, Frank. Thanks, guys. See ya.
See you.
Bye.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hey guys, how's everyone doing? Let me just sort the camera there. Cool. So, yeah, it's been interesting. I'm sure you've already heard the week breakdown, what happened over the weekend with Trump and things. So I won't go into that. I don't want to start repeating things, but yeah, we did see quite a nice move on the dollar. So let me just pull up the dollar index here. So obviously we had the market gap on market open, so that was a nice sign that we could potentially start seeing some bullish moves on the dollar. And although I've been saying that I am a bear on the dollar, which I am, but I do see potential bullish moves coming. We do have actually, let me just pull it up one moment. Where is it? Unemployment rate is still low at 4.1%, so it is upticking. Let me pull this up actually here. So obviously unemployment is increasing, but 4.1 is still not a large amount really. So it's not necessarily a concern. However, it could be something to keep in mind as we go forwards into the future, but over the short term, it's not necessarily something to worry about. We also have CPI, which could be a sign that the Fed might slow down or pause rate hikes. Obviously, we are kind of expecting rate cuts in sort of November, September time. That's kind of the word on the street now in the bank reports. So obviously that is bearish for the dollar. But yeah, again, in the short term, we could expect some potential bullish moves, basically just relying on the current rates in the US. I also would like to see a correction of the move that we see here on the left from Thursday. I think that the dollar is at quite a large discount at the moment, and obviously just relying on very basic technicals, we are at quite significant support on sort of the daily, the 4 hours. So some sort of natural sort of correction of this, and then possibly a continuation to the downside from there would make sense for me. In terms of what's actually on the watch list, we have the Euro Australian that I really like. So we can see on the daily here, we're rejecting this 21 EMA. We also have the fib here with the golden zone that lines up really, really nicely with this level of resistance. So I'm just waiting to see if we could potentially get a slightly higher move on the Euro Australian. We have already had this sort of testing period of this level, so it wouldn't be a surprise if we don't get to this level again. We are also quite close to the 200 moving average as well now, which could be a sign that we are starting to see sort of the potential top of this and then a continuation to the downside, in which case I'll be targeting this 1.58 level at the fib extension, which is at this sort of level around here. So maybe just a slightly higher take profit actually. So possibly something around here. And that's still a great trade, to be honest. If we could get sort of a, let's see, sort of a roughly a 1 to 3-ish, I think that'd be fine. I'd be more than happy to take a trade like that. NASDAQ, I think, everyone's looking at the NASDAQ at the minute. I would have liked to have seen a deeper pullback, to be honest. This wasn't large enough. I think, we could all agree that this isn't a healthy pullback, should we say. Obviously this was a news driven move. It wasn't sort of a natural correction of the market. So I was ideally looking for this sort of 20,000 level to get hit, and it just wasn't. You can see I've got an alert set just in case it does. We might see some sort of pullback here. However, it doesn't look too likely at the minute. We are seeing price rocket to the upside, and it has been all day really. So not much hope on this one. I think NASDAQ's one of those trades that we have to, I just have to sort of sit and watch with a bit of a bit of FOMO, but there you go. That's what it is, unfortunately. The Euro Canadian. This one, again, very, very simple trade. Just looking at the market structure. So we can see we've got a nice sort of level throughout here that was used as resistance very briefly, which is now turned into support, then turned again into resistance. So I'm now just looking for some sort of pullback into this level, and then again, just looking for the continuation to the upside. But yeah, it's not looking too likely, to be honest. I'm not sure if we're going to get a deep enough pullback to warrant an entry, just because we're on such a run to the upside. We're seeing very strong markets at the moment, a lot of bullish moves. So the pound dollar, I won't go into this one again too much, just because it's not necessarily a short-term trade. There's quite a lot going into this one. However, I do, I've explained it on my Twitter account quite a lot, and essentially it's just relying on a weaker pound going into sort of the end of 2024 into 2025, and also using sort of the Fed cuts as possibly a catalyst for this. Now, obviously, that would weaken the dollar, so that might not make sense. But to me, just using some sort of news event to get into a position would be ideal, really. But again, it's just too premature at the moment. We need to see a slightly higher price, and whether that's this huge sort of weekly and daily level we have up here, which is the sort of 1.42 area. Yeah, I'm not sure, or the sort of more minor level we've got here at 1.31. The issue is I just don't see this 1.4 level as being realistic. We're over halfway through the year, and I think that we should be a lot closer to this level than we currently are. If this was going to get hit, I don't think it's a realistic target right now, to be honest, even though the pound is doing quite well for itself. The pound New Zealand, this one again just relying on some short-term bullish pound. We've got stability with the political side on the pound, or in the UK economy at the moment. However, I don't think that's going to last, but we may as well ride the momentum while it's there for the short term. So if we look on the H4 here, you can see price is very, very extended at the moment, very deviated from the 200. So 200 moving average right here. So we're about, 2% above, which oftentimes means we will see some sort of mean reversion, which means we'll see a pullback to sort of an average price and then a continuation, or sort of relax and stabilize this move. So I would like to see a pullback to this level of support. In terms of targets, I'm not looking for anything too huge. So possibly just back into this level. However, I have a feeling we've missed this move. I'm just not sure we're going to get such a strong pullback. So we'll have to sort of see where price tops out at, and then use a fib to possibly gauge some sort of entry from there. However, there's no structure here really to back this up. So it may just be sort of a no-go trade and one we watch from the sidelines. Low audio. Let me have a look, see if I can boost it. Can't hear. That's strange. I'm not sure why that would be. My settings haven't changed. Yeah, I'm not sure. I've just boosted it in the settings on here, so maybe that's helped. But yeah, other than that, I'm not sure. I'm not sure how. Maybe just turn your volume up. So yeah, I'm not sure how realistic this move is to get such a strong pullback, but again, it's worth watching. But I've not got too much hopes on that one. So yeah, I think overall, these bullish moves are very, very good if you're already in them. However, I'm not, so it's a bit painful to watch these because obviously, we've missed them and now just looking for pullbacks. I'm just not sure how likely that is. I mean, if you look here, we've got this really nice level of structure. So obviously resistance turns support, and then ideally, in a perfect world, we would have seen a rejection of this resistance, and then a continuation to the upside, a break and retest on this level. But of course, that hasn't happened. So yeah, it's a case of just looking for pullbacks. Prices at the moment in a lot of the markets are very, very extended. I'm a bit unwilling to say overbought. However, they do look quite overbought in my eyes. Pound Swiss, this one is also looking very, very nice to the upside. Of course, the Swiss is one of the most shorted assets on the COT scanner on the EDGEFINDER. Let me just pull it up and double check. It still is. It might have changed by now. I'm not sure. I don't think it will have done, actually. Yeah, so you can see here, the Swiss 90% short, and the pound is 72% long. So makes a lot of sense to go pound Swiss to the long side. Of course, like I said, we've got quite a strong pound due to some political stability now. So essentially, there's two things we could look for here: either a pullback and then a continuation and sort of this break and retest, in which case I'd be looking to enter on this pullback, or we could see this and then continuation to the upside. So obviously just a break, clean break above, and then enter on this retest, which, to be honest, I think this one is more likely, this sort of break and retest. I just don't think we have the sort of selling pressure in the markets to have such a strong pullback. And during this retest here, this may give the moving average a sort of price time to stabilize and sort of correct itself. Australian CAD, not too much of a fan of this one at the moment, although, you know, the Australian dollar is very bullish, so looks fine. However, technically it's just not the best. We do have a nice structure here, but again, I just don't see these pullbacks as overly likely right now. So I'm kind of just sitting on my hands. I've got one position open on the dollar against the Mexican peso, but I can't show that one right now. We did close silver as well, so I can show you that one. Now, Australian dollar against the US dollar, I really like this one. I would love to see a pullback down to this level of resistance. I think this one is very, very textbook. It's almost, you know, if we do get this pullback, it would be one of those trades that it's kind of no-brainer. You would just take it, or I would just take it anyway, because it's very, very what do you call it? Textbook break and retest. Gold, I think everyone's looking at gold at the moment, as well as the indices, especially Nasdaq. Gold is on a huge runner. Now this is same factors as before. We've not really had anything change with gold. We did have obviously the attempted assassination on Trump, which likely put some fear into the markets, but to be honest, I think that's a little bit overplayed. It's done, it's happened, nothing, Trump was unharmed, relatively unharmed, apart from his ear. Obviously there was one unfortunate casualty, or death, should I say. But overall, in terms of economics and markets, I really don't think it's worthy of having much movement. If he died, that'd be a completely different story, but he didn't. Moving on. I think my stance on gold has been the same for the past couple of weeks, which is I would need to see a break and retest. So a break of these all-time highs, a retest of this level, and then that would warrant an entry for me. Now, I wouldn't be taking gold at full risk, just because we are, if this happened, it would be pretty risky. It wouldn't be a shock if we did break all-time highs and then come back down. Essentially the same as what we did when we did have these all-time highs, when we formed this level of resistance. Now we just shot to the downside, really. So you got to be very cautious of that. Gold isn't just a bullish train. Although the trend is overall bullish, it doesn't mean that it can't have some pretty fierce pullbacks that you could easily get chopped up in. So this area is very important. And if you are for some reason a bear on gold, then this would not be necessarily a bad place to potentially look to short. Although, like I said, I'm not looking to short. I don't think that's a very wise decision. And then last pair on my watch list is Australia and New Zealand. Same reason. Basically, we've just got the very strong Australian dollar. I think we are due for a pullback. If we look at the deviation between price and the 200, we are 1.6% above, which to me indicates that we are overbought. We need to see some sort of pullback here. Stop loss just below this low, just in case price does come down and correct this move here. And then take profit, where would take profit be? Let's see. Yeah, potentially up at the previous highs around here. But that's essentially it. All I can do is show you our silver position. If I've still got that marked here, which I don't. Let me see. So yeah, we closed out of silver here. We sent a few different trades here, so we allowed people to scale in and things, but I only took one position. So I got out of this roughly 0.6% gain, so nothing too huge. I closed somewhere around here, but yeah, that's that really. There was no reason to close silver. If you are in silver, I'm not saying that you should go and close it. I'm not saying that there's a bear market is going to start. It's mainly just because we wanted to free up some of our portfolio, we wanted to reduce our exposure, so we could enter into some other positions. So yeah, that's about it really. So we can go into, I see someone's asking for New Zealand dollar. Forex Guru. People are saying there's no sound, but other people are saying it's fine. I'm not sure what's going on. I don't know if it's my end or if it's you guys. I'm not sure. Because my settings haven't changed. Let me just see. Yeah, nothing's changed. So New Zealand dollar. Let's see. I don't really trade the New Zealand dollar too much. Sound works great. Good stuff. Okay, so New Zealand dollar is kind of in a range, to be honest. It's not something I would go out of my way to trade. I'm not really a fan of where's my box? I'm not really a fan of it when markets essentially just move sideways. Same as what gold's been doing essentially. There's not really anywhere here technically that I would want to enter, but we could take a look at the EDGEFINDER and we can see if there is anything on here that would back up a trade. I'm fairly sure the New Zealand actually is quite bearish at the moment, so it would make sense to go short. Yeah, here we go. So COT data is short, retail sentiment's pretty balanced, however hedging towards the long side. Trend reading is bullish, sorry, COT's bullish. Seasonality is bullish, trend reading was trend. Yeah, so yeah, COT is long on the New Zealand dollar. Looks at it. Was it short? Yeah, okay. So overall, I'd be looking to short. Sorry guys, I've only just got to the charts. I've not really done too much over the weekend in terms of research, so I'm just trying to catch up while I'm with you. So yeah, overall, I would be looking to go short. In terms of technical levels, I'd be looking for just sort of these lows down here on the H4, so around the 0.59 level. Stops above the previous high, so somewhere along here. But yeah, I mean, for me personally, I wouldn't be taking this. Obviously, it depends on your strategy. But yeah, so dollar yen. Yeah, so I'm actually in dollar yen to the long side. So actually what I'm going to do is I'll show you my actual trading account, so I'll give you a bit more perspective. So you can see we've got the analysis here, so just looking very basic technicals. We've got this nice level of structure throughout here. We've got a pretty clean trend line, obviously to the upside. Very simple stuff. We've got the RSI that's oversold, and of course the economics towards the dollar yen are bullish. It's one of the cases where I'm treating the yen pairs more as an investment rather than as a swing trade or a day trade or anything. So as you can see, there's no stop loss here, and that's because it's essentially one of the ways I trade. I've got multiple positions on different assets that don't have stops. And it doesn't mean, just because there's no stop, it doesn't mean I'm gambling. It's more a case of I'm happy and I'm very, very confident that this market is going to continue to the upside. You see I've got take profit here at sort of the 165 level. That's my sort of target by the end of summer. And no matter what happens in the dollar yen, I'm just going to keep buying. So even if it dips more, I'll just add on more. And it's because I'm a fundamental trader, not necessarily a technical trader. And sometimes to be a fundamental trader, when you are looking to trade over the long term, rather than having stop outs and having to re-enter and having to look for new entries, sometimes when you are confident in your analysis, it can work out that you can just keep placing positions, obviously with managed risk and things, and just wait for the trend to kick in. And as you can see, this market is very bullish. There's no way I want to sell, and I'm happy to just let this run. Now it's the same with the Australian yen. So I've done exactly the same thing here because we've got a very, very strong Australian dollar. The yen's obviously very weak. This is quite literally a case of buying strong, selling the weak. So it's very textbook. I'm very happy to just sort of sit in them and watch the ride. US 30, you are long, sure. But a bit confused about the volume. If it's low, I just can't work out why. Anyway, we'll move on. So US 30, you see I was looking for an entry down here where I've got this alert set that was never triggered, unfortunately. However, US 30 to the long side makes a lot of sense. Let's see. Yeah, so daily's bullish. Monthly, obviously bullish. The H4 is bullish, so definitely not upset about buying the US 30. I only ever go long on the indices, so it makes sense. But yeah, it looks fine. I would potentially expect some sort of pullback, but that's because I'm a pullback trader. I like to see them just to enter the markets. But yeah, I would like to see some sort of movement down to this level. And then a continuation higher. But if you are already in long positions, don't worry. I wouldn't be looking to necessarily close out, but just secure positions, make sure your risk is managed and things. Of course, this isn't a financial advice, just my outlook on things. We've already covered gold, the New Zealand Swiss. If you want to rewind, you can see gold. So I don't like New Zealand Swiss as well because both currencies are quite weak in my opinion. I'm not looking to buy either. I'm actually quite bearish on both of them. The Swiss is very, very short. The institutions are 90% short on the Swiss. New Zealand dollar is not doing too well either. So to me, not a fan. I mean, you can see by this price action, there's not really much here. Just sort of sideways movements. In fact, we've not really had a trend since this one here. The rest of this is, we've had a slight move to the upside. However, it's been very, very messy. Trying to sort of trade this, especially based on technical levels, would have been very, very difficult. Definitely not something I want to be involved with, to be honest. So, yeah, I won't really go into it too much further, unfortunately. Pound dollar, we've also covered pound dollar. So short term, I'm looking to go bullish. I'll cover it again because I think I might have skipped over it a bit too quick. But yeah, I am looking for the sort of 1.315. Wouldn't surprise me if we reach there. Like I said, we've got quite a strong pound at the moment. We've got the stability with political things and sort of hope in the UK economy, although I disagree with that. I think that the economy is very difficult, and I think it's in a very hard place, and I don't think that Labour is necessarily going to fix those issues. However, with a new government coming in after 14 years, and already these problems are obviously pre-existing, of course there'll be that hope. I don't know what's going on here. I think my camera keeps freezing as well. Having some technical difficulties today, guys. I'm sorry. So yeah, where was I at? So yeah, short term bullish on the pound. However, long term definitely looking to go short. What I can do is show you something actually that, let me see if I've got it. I might not have it anymore. Yes, I do here. So this is a bank report from UniCredit. So if we look, we remain bearish, especially looking into 2025, and they're referring to the pound. So obviously there's a lot of information in here. I won't go through all of it. But yeah, overall, they are looking to short the pound into sort of the end of 2024, start of 2025. So we look at the conclusion here. The sterling reapproached 128 against the dollar following the outcome of the UK general election on the 4th of July, even anticipated beyond the 0.85 against the euro. Nonetheless, the pound picture remains bearish, especially looking into 2025. Stretched public finances and self-imposed fiscal rules leave little room for action on the fiscal front. Hence, looking ahead, the intensity of a Bank of England easing cycle and the consequent move in interest rate differentials will likely remain the main driver for the sterling in our view. We expect the Bank of England to start cutting rates in August and to cut quickly afterwards to help a still flattish UK economy. We thus expect the UK base rate to end in 2024 at 4.5 and to end 2025 at 2.75 from its current 5.25. Sterling remains undervalued with respect to the long-term fundamentals, yet it is the more intense Bank of England easing we expect with respect to the Fed and the European Central Bank will probably drive the GBP USD towards 1.2. So as you can see, my target is at 1.2 down here. Sorry, is it? Yeah, 1.2. So that's sort of very basic overview of that. You can also see that the euro pound as well. So yeah, very, very basic overview there. Obviously not gone into too much details there. Powell speech XXX USD buys. Why do you think that, FDL? Can you justify why you think that, or is that a gamble? Not trying to call you out, just curious. So yeah, actually, let's just see the DXY again, or the dollar index. Yeah, so we've seen very flat movement on the dollar today, actually. Very, very little movement here. We did see, obviously, like I said at the start, we've seen the gap, but since then, very little, just up and down, not really in either direction. However, we have broken out of the sort of flag, I guess you would call this. I think that's what people call these patterns. But yeah, I think definitely due for some sort of pullback, whether it's due to news or whether we get some natural sort of market movements, it wouldn't surprise me. So I am looking at some bullish trades, some dollar bullish trades. So if we look here, we've got the dollar Mexican peso. I know I said I couldn't show you this, but it's fine, I think. So we are long on this. For now, it's only a short-term trade. You know, we're not looking to hold this into, not looking to hold this one for too long. It's more of a sort of intraday position for this week-ish. Guys, I blew the full 1K. How did you blow 1K? If you can tell us how it happened, we might be able to give you a helping hand to avoid that happening again. So we're also in the the euro pound position here. I think I showed you this trade last stream that I was on. So really clean, actually. And again, this is just running mainly off some instability within Europe and then counter stability with the pound. So we did come down to this level of support. Now seeing sort of a failed breakout. We did see the RSI become oversold as well. And again, as I've been saying, we see this sort of deviation. We've seen a large distance between the 200 moving average and the current price. So pullback very due, to be honest. However, I do see this continuing to the downside a little bit further. Thoughts on a gold sell-off? So gold's interesting. I'm not saying we couldn't see a gold sell-off. Sorry, guys, 1 second. Okay, so sorry, I just need to read a message. So gold sell-off wouldn't surprise me. Camera's frozen again. I don't know why that keeps happening. Very strange. I apologize about that, guys. It's been a bit strange. So yeah. Anyway, we're back. So what was I saying? Gold sell-off. I don't see that as out of the question. So let me pull that up and I'll show you why. Because as I was saying earlier, when we get to these all-time highs again, or even if we break these all-time highs, we might see a lot of profit taken by larger market participants, or even a lot of people in general. And of course, that can drive some lower prices. But that wouldn't necessarily mean that the gold bull run is over. I think that we'll see gold is bullish sort of until the end of the year at least. And especially as we get closer to US elections. But I mean, it depends what you define as a sell-off. You know, if we see a sell-off like we saw here, then I see that entirely possible. But if you mean a sell-off, you know, back down to sort of these early 2024 lows, then I don't really see that as realistic at all. Especially yet. It might happen in the future, but right now I don't see that really happening. Right, let's have a look at these comments. Let's see. You got too confident and used 2.5 lots on 1K. The money wasn't yours. It's your auntie's money. That's crazy. So first of all, don't trade someone else's money if you aren't ready for that pressure, because it's, you know, trading someone else's money is very, very different from trading your own money. Unless you're trading on the behalf of a high net worth individual, it's very stress inducing. So that's your first mistake. Second mistake is trading a very small account with a very high lot size. And now you're freaking out about it. So tells me you're not ready to be trading high lot sizes. You're not ready to be trading someone else's money. You know, that's basically what it comes down to. You need to step back, I think, and sort of take a look at what you've actually done, and take some accountability for it, and then try and move forwards. But yeah, I mean, you're gonna have to work a 9 to 5 and pay it back. If you blew the whole 1K, if you had 1K and you blew it and you've got like $50 left, I'll be totally honest with you. You may as well just try and gamble the rest and make it back. The worst you can do is just lose the rest of it. You've already lost most of it. And I know that might be controversial, but that's the way I see it. You know, what other option do you have? So UK trade unions planning to strike in September. I wouldn't get too confident in the pound. Yeah, exactly. I really don't like the UK. I don't like the economy. I don't like the politics. I don't like the currency. I think that a bear move on the pound is coming, and I think it will be huge. I've been talking about it a lot on Twitter, and to be honest, I'm the first one, other than sort of one or two bank reports here and there, to be sort of openly saying that I'm bearish on the pound. Thoughts on the Fed today? I don't have thoughts. I'm very neutral in the markets. I don't think about anything before it happens. And by that actually sounds really bad. I always think about trades before I go into them, obviously. But what I mean is I don't really go into news with some sort of idea or bias, because I think that can be a bit more dangerous. So I'm happy to just go into the Fed speech, see what it says, and react afterwards. Same lot size, different balance. Will it affect the value of the trade? Nope, absolutely not. You could have a $5 million account. You could have a $500,000 account. If you trade 100 lots on both accounts, the result will be exactly the same. And the same goes for a $10 account and a $1,000 account. 0.01 lots will be exactly the same. So both accounts will profit $2 or lose $1 or whatever it may be. Gold recap. We've already discussed gold. You feel depressed. What can you do to feel better? Yeah, FDL is right. You need to take a break. You need to get off the charts, go and do something else, forget about the money. And then at some point, you're going to have to look in the mirror and realize that you made a big oopsie. Well, to be honest, bro, I can't even deposit 500 USD and try to bring it back to 1500. That's the exact mindset that got you into this problem. That's the problem. That is the whole issue. Why does your mind automatically go to trying to flip $500 into 1500? It's the wrong way to approach the markets. The markets aren't here to make you rich. The only people that really make money trading are people that are already wealthy, and it's not because of necessarily a money thing. It's more because they understand the way that markets work and what they're here for. So in the FX market, actually, let me show you something that may help you out a little bit. So this is a tweet I put out today. So yesterday I tweeted this: it's much more profitable to trade the exotics markets compared to the major FX, and I'll explain why. So G10 currency pairs. Does anyone know, obviously I've just hidden it, but someone may have read that already, but does anyone know, and can anyone tell me what the G10 and the developed markets are used for on a primary basis? So you could say, obviously speculative trading, investing, hedging, all sorts of different things. Can anyone tell me what their main use is? And obviously don't say exchanging currencies, because that's quite obvious. I'm just going to show you anyway. So the G10 and the developed major markets are, let me find it. Yeah, so here. The FX markets are renowned for their liquidity, with trillions of dollars circulating daily. But why is this the case? Primarily, it is due to large corporations hedging their cash accounts. Now, what that means is that, no, it's not liquidity, FDL. Well, actually, it is. I can't say it's not. Technically, it is. What was I saying? So yeah, hedging their large cash accounts essentially means, let's say that Coca-Cola, Apple, Microsoft, all these, large corporations have, these are all American companies. They have, I don't know, 200, maybe $1 billion sat in their accounts. They're not going to just leave $1 billion just sat there. They often hedge it with different currencies. So essentially their money doesn't lose value, or it loses value slower, and they can allocate it in different places. They can also then make international transactions in a lot more of a smooth way. So rather than having to convert dollars into yen, for example, every time they want to do a transaction, they've got a cash account of yen. And these transactions happen every day, all the time, essentially. So this is why trading things like the 1 minute and the 5 minute are extremely difficult to do, or extremely difficult to make a profit on, because a lot of those movements aren't due to economic factors. It's not due to news. A lot of these movements that you see on the 1 minute and 5 minutes are just transactions. It's just corporations moving money up and down and up and down. There's no necessarily no direction. Now, I say that here. So while there is money, there is large amounts of money going into these developed markets. It's not necessarily a positive thing. It's not negative, but it's not good necessarily for the average retail trader like you and me. And that's because this money isn't being put into trades. It's not, Coca-Cola or Apple saying, oh, I think the euro dollar is bullish, I'm going to buy it. It's just there in their cash accounts. They're not speculative traders. Whereas if we look at emerging markets, so things like the USD TRY, we can see here, we've got the trend on the USD TRY, and we compared that to the US dollar, the euro against the US dollar. I'm fairly sure you can all spot a huge difference between both of these markets very, very quickly. Which one would you prefer to trade? Because to me, it's the US dollar TRY. Very, very clear. So yeah, emerging markets are predominantly influenced by speculative interest, which is obviously used to gauge the market sentiment. So yeah, anyway, I mean, that was a long roundabout way of what I was actually trying to say. But the point was that these markets are euro dollar, pound dollar, gold, all these things, they're not necessarily there for you to try and flip accounts, or they're not there for you to try and flip accounts. Normally, these assets are here for hedging cash accounts. These are just price fluctuations, you know? So my point is, change the way that you see these markets. They're not here, and you shouldn't be thinking of them as a get-rich-quick scheme or taking people's money to try and trade it. You really need to sort of zoom out your perspective and realize, you know, that it's a lot more complex than that. My X handle is the same as my name. If you just search Forex James, I'll be there. I think that's about it. That's all I've got to really say. If you guys have got questions, I'll be happy to answer them. I'll give you a couple of minutes to ask anything if you need to. But yeah, in terms of the markets, I think that's about it. It's an F up feeling, it's an F up feeling when it's not your money. Yes, it is absolutely. I trade investor capital, and it's one of those things where if you're not, how do I explain it? If you're not cut out for it, it's a very, very hard, it's a very hard thing to do. Because when it's your own money, you know, you can put some more money back in if you lose it, or you can take that time and do what you need to do. Whereas investor money, you obviously have that pressure. I'm assuming you're not sending investor reports and balance sheets and things, because, you know, I'll be totally blunt. I don't mean this in a nasty way. You sound like a very quite an amateur trader. So trying to explain that you just lost all the money is very difficult. What's the highest profit you have made? That's a good question, actually. I'm not sure. Highest profit I have made, actually, I can show you. I can't show you the actual statement. I don't think I've got it on hand, but it was during, where was it? It was during the Ukraine and Russia situation. I think it was around here. Oops, zoomed in way too far. I made about 11% off that move. I think it was here. I may be wrong. I can't remember the exact date. So that was about an 11% trade. I think it went up to about 19%, but I was left holding the bag a little bit. But yeah, it was, I think it wasn't huge. You know, if you're used to all these funded trades and things, it probably sounds quite small, but I think it was about 9,000 British pounds. Which was very nice, but you know, that's not everyday gains for me. So how much are you in profit this year? I can show you. So this is my company portfolio. So this year we're up just under 21%. This is slightly off. I've not updated it for July yet. It's probably slightly lower. I think we're actually negative this month by a little bit. Not obviously not much. I think it's 1 or 2% we're down. But yeah, this is the way we track our trades for the company. Toby, hello. So yeah, last thing, guys. If you do want any questions answered, ask now. If not, I'll head off. I'll leave you guys to enjoy your days. After night short stories, you can give advice when you're ready to give advice. You know, I wasn't always like this. It took me a long time to get to where I was, and to be confident and comfortable in the markets, because you get to a point where there's a strange thing. I'm not sure if Nick will have gone through this as well, but you have a point where you're confident to do what you need to do. So trading for yourself and doing your own analysis and research. But then when you start putting it out in public and start showing more of what you do, it becomes a bit, you start second guessing yourself sometimes. It's like, oh, did I actually get that right? Is someone going to call me out and I'll look stupid? I mean, obviously that's not, it doesn't happen. Very rarely happens anyway, I think. I don't think I ever really see that. But it's just that thing of when you know people are watching, it becomes quite difficult sometimes. Yeah, so yeah, I agree with Will. No one, I could sit here and show you the way I trade, and my strategy and things, but it won't work for you. It's purely because, I take profit, stop loss, and generally just don't touch it. Whereas if you don't have the confidence in the strategy, which you wouldn't, so if I gave you my strategy and said just place the trades and leave it, you probably won't do that because you won't have the confidence I have in it, because I'm the one that made it and back tested it and knows it works, not you. So yeah, you need to hit the drawing board again, I think. Anyway, guys, thank you for having me. I'm sorry that we've had some technical issues. Thank you for having me. Been a great chat as always. I will see you guys again very soon. I'm not sure when I'm next on, but I might be on again this week if the A1 guys let me. Is it fine to say gold is going to sweep buy side liquidity then move down? That's my sign to go. So I'll see you guys later. Thank you guys. See you later.
All right. And there we go. Real quick, we're just going to run a quick break. We'll be right back. The show's going to continue as we get closer to the Powell speech. So stay tuned. We'll be right back. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, guys, welcome back. Hope you're hanging in there. We're back for another one here. The second stream of, well, my second portion of the stream. Stream's been going on. We're on 3.5 hours in. Hope you guys enjoyed the other guests. It's always cool to just get a bit of a rotation. As you guys just saw, if you're someone in the US looking to trade FX, check out Oanda. I've used them for years. Great brokerage, great people there, super regulated. And at the end of the day, for my US friends who trade FX, if you are wanting to trade currency pairs, like Oanda is the only option, in my opinion, because if you're trading offshore, your account could get shut down at any moment. It's not worth taking the risk with your money. You're trading already. It's hard to make money trading. You're taking risks every day. Why risk not being able to withdraw your money at all? Oanda is super regulated. So yeah, check it out. If you're in the US, definitely check out Oanda. If you're not in the US, a couple other brokerages, you could check out Eightcap. Maybe we can drop the link to Eightcap, and we'll just do a couple different broker options for you guys. One thing you could do, if you're somebody who's looking for a broker, we've put together this cool page. In fact, I'm going to drop the link for you guys here in the chat. Check this out. This page might help you out. My team and I, we've put together this page, which helps you to, based on what country you're in, find a brokerage that has the best offers for you. The reason this is worth taking a moment to look at is because a good sign-up perk is like free money, right? You can get like free shares when you sign up, or a deposit bonus when you sign up, or free access to products when you sign up. If you're somebody who's looking for a better broker, take 2 seconds out of your day, check out a1trading.com/brokers, and you might find something on there that's like, oh, heck yeah, I'll do that because then I'll get this deposit bonus or whatever. So all the details can be found here. You know, if you're in the US, you can check out the 2 brokers and the offers that we have there. So each one with specific links that are on these pages have been worked out by me and my team with our different partnerships with these brokerages. They're special perks. So Warner's Way says, very nice. Yeah, don't miss it. I'm telling you, it's if you're like open to switching brokers, definitely, like, brokers want you to sign up with them. You might as well get something like special in return. We have several offers on our website. Just wanted to throw that out there.
Gold erupted higher here, guys. We are reaching new heights today. Today is another really, really good day for gold bulls. And I know that there are people out there who are, when markets move like this, I said this to James just before I jumped on the show here. James is one of our producers, not the previous James that was on, but James, the producer. We were talking about just how, periodically you have people who are really struggling coming in the chat. And if you're listening, I totally feel for you. I've been there many times. And I understand like how hard this stuff is, and you realize how hard it is. And it's pretty humbling, right? When these kinds of moves happen in the market, a lot of people lose a lot of money because they overestimate how markets are that difficult. They really are that difficult to make money in. That being said, what I've learned over my years of trading is you need to back test. You need to actually take the time to learn this stuff. And when you see somebody like myself or some of our other guests who are, showing their results or their years of work to get to the point, you're looking at somebody's blood, sweat, and tears, right? You're not looking at somebody's like, oh yeah, I just threw an account together and started throwing directional trades. Like, oh yeah, I think gold's going to go down. Oh yeah, I think so. No, like professional trading is like a 4+ year degree. It is so difficult to get to that point. And the reason I harp on that message so frequently is because I think people need to hear it. Social media is so full of people telling you how easy trading is, when it is in fact like one of the hardest things, if not the hardest thing that I've ever done in my life. It is so hard to consistently make money overall in the markets. And drawdowns are incredibly painful. So it's not easy. There are easier ways to make money, trust me. Like if you're somebody who is like, it's just the learning curve is so much bigger than people think. It was so much bigger than I thought, that's for sure. Anyways, everything is moving like crazy this morning. We were up, 1.3% on the NASDAQ. It ripped to highs, or not to highs, but to today's intraday high. The S&P 500 reached an all-time intraday high. It's giving back some of that, but if it were to close right now, that's an all-time closing high right there. And look at the Dow Jones, guys. This is actually really impressive. We're actually seeing value, SPYV. Value is up 0.5%. SPYG. Is this growth? Yep, growth. Growth's up slightly more. Okay. Anyways, the Dow Jones is killing it today, breaking through the highs. I like this one on a pullback. Now that we've broken this level of resistance, we're confidently above the 40,000 mark on US 30. That is the Dow Jones Industrial. Really crazy. Really crazy. Is using TradingView Replay okay for backtesting? It is, but I think, backtesting with the right platform is really, really important. I have mentioned and partnered many times with Forex Tester. I think they have a new product that is coming out that I've got video details coming on soon, but I can't speak too much on that. But it's really exciting. And backtesting is what you make out of it. A lot of people cheat their backtesting, right? They don't spend the time. They don't spend hours and hours. And I think it's really necessary. If you don't know anything about backtesting and you're like, what is backtesting? It's basically going back in historical price action and studying your strategy, like practicing your trading, basically. It's like trying to just show up to a basketball game and play like a hero when you've never gone to a practice, right? Like if I went to a basketball game and tried to play basketball in front of a bunch of people, it would be the funniest thing you ever saw because I would look like such an idiot. But if I went to practice, I would still look like an idiot, but I'd look like slightly less of an idiot. That's very comparable to trading. You go to practice a lot and still look slightly less dumb, but still it's hard. So gold is pushing higher. It's definitely a monster mover for me. And July is actually shaping up right now. We're at the halfway point of July. I think I'm up 4% in my account, which is pretty good for me. I know for people who go for more, you go for more. For me, a 4% month is like really big for me, because usually I'm shooting for like 2% as an average. Like 2% is a good month. 4% is an excellent month. So I've had I've had a good streak, and most of it has been off the idea that I have kind of been vocal about my thoughts on, I think rate cuts are coming down the pipeline this year. I've mentioned that because, in my positioning as well, right? I'm long technology, XLK, which is the biggest current winner on the account, gold, GLD. So I'm long gold. That's the second biggest. And I also have silver, a little small position on silver, which is not small, but proportionally it's smaller than my gold trade and XLK trade. And then I have TLT. So TLT is a bond ETF. So I have a couple different trades going right now, and I will be real with you guys. Like, as a content creator, I want to take new trades. I want to be more exciting than simply just saying, oh yeah, I got these big winners, I keep running. But like, genuinely, as like a trader, here's my thing. My goal is obviously to like make the most amount of money I can with taking the least amount of risk possible. So from a trader's perspective, I can say genuinely, like, the actual thing I'm supposed to do right now is absolutely nothing. But I'm telling you candidly, like, as a content creator, I want to take new trades. I'm taking trades as dangerous. This is dangerous about being a content creator in the trading space. I want to take trades because it's more exciting for content, right? But there's nothing I can do, right? Like, I know at the end of the day, my number one goal here is to make money. Trading is, a way that I make money. It is, so that's the thing, is I'm like, I have these pressures where I'm like, I want to trade for content. I want to trade for, but sometimes really the best thing you can do is trade nothing. And I know it sounds like, well, it's easy when you have good trades running, but even if I had no trades on, sometimes, and this is the most frustrating time, is when I have no trades, but I also know I'm not supposed to take any, right? And we'll do some, I'll show you what I mean by, I know I'm not supposed to take any. I know my system. I've traded it for years, but yes. Questions about, these are always fun conversations. So wait, Nick, is 4% good monthly profit? I make 10 to 5% weekly. So is it possible to make 5 to 10% weekly consistently? In the long term, no, you'll blow your account. No one's ever done that for a consistent long period of time. 100% chance you will blow your account if you trade at that rate for too long. You might have a stretch where you make 5% a week and it's going well, but then when things go poorly, there will be times where I lose 4% per month. There will be times where I lose 5 or 6% in a month. I haven't had that in a minute, but I know it's coming, and I know it's going to suck, but it's what you accept. Will you cover Uncle Jay's speech? Yes. Speech is in 30 minutes, guys. James informed me that they moved the speech back, but we will prep for it. We'll talk a little bit about it and see what he has to say. So, if you look at the math of returns, pretty, it's not even controversial to say that the more you go for, the higher your drawdowns inevitably will be. In the markets, there's no free money, and the more reward you're going for, the greater risk you take on. And if you get lucky for a period of time and you have really huge results, but you don't have any drawdown, if you keep doing it, something will change. Markets just change over time. I'll give you a quick example. This year, if your strategy has been, I leverage and I buy the NASDAQ with a big lot size every time it dips 1 to 2%, this year, you would think that you are a market god, right? And you'd say, well, look, my drawdown's not been bad, and I make 5% a week, and it's been so easy. But 2022 would blow your account. Do you see what I'm saying? There is it in a nutshell. The environment that you're in can be very deceiving. If you're in the right environment, you can make a ton of money with particular strategies. If your strategy was to trade range bound on the NASDAQ, you've gotten killed. If you've been shorting the NASDAQ, you've been getting killed. But shorting the NASDAQ over here would have been genius, right? So my point is, every strategy has weaknesses. Every strategy has drawdowns. If you risk too much in a good time and believe that it will continue like that, when conditions change, you'll blow your account. So anyways, I don't go for huge returns, but I'm also like very privileged to have a larger capital basis. I don't need to make big returns percentage wise in order to do decently well with like the P&L. So, and that's a huge advantage. Trading a bigger account, you don't feel pressured to make big percentage gains. Big percentage gains is what leads, like the temptation to go for bigger percentage is what leaves people ultimately blowing their account. And again, the biggest deceiving thing that I always rant about with the NASDAQ is like people get used to what they're in. They get used to it going up or they get used to it going down. And when it changes, things get, a lot more hard. So right now we're in a bull market and I do very well in a bull market myself. My strategies typically do really well in bull markets, which is why my performance has been really good this year. We're in a bull market. But I'm conscious enough that I know that when things change and gold and NASDAQ aren't trending up, I mean, gold has been a big winner for me, but it's also been a really nice bull market for gold too. So I'm not thick-headed enough. I am thick-headed, but I'm not thick-headed enough to think that this is going to continue forever. I know that I'm in the right environment. I'm making money on this stuff while I can, but I understand that something will change, something will break, something will turn these markets around. But I don't know when that is. And for me, it just means make hay when the sun is shining, as my dad always said. So make hay when the sun is shining and trail stops and be prudent, but don't get arrogant, because I got arrogant in 2021 and it cost me huge in 2022. I'm in a really good stretch in my trading. Like I am making more in my trading than I ever have before right now. But in 2021, I was also making more than I ever had before. And in 2022, I got absolutely crushed on camera. It was bad. I got destroyed. My percentage drawdown was like 35%. I shared it on YouTube, and it was a really tough psychological time for me. But I stuck to the plan, and things have rebounded. But my gosh, it's like I lost like a kidney during that time. It was so painful. And it's probably going to come back. So since that time, in 2022, I really, really made a decision in my trading that I think 2022 was such a lesson for me, because during this time, I had a very significant drawdown. Because again, as I mentioned, I typically do better in bull markets. I typically am more on the bullish side of sectors, ETFs, stocks, indices, which is what I trade a lot of, and gold. And everything dropped in 2022. Bonds, gold, stocks, everything dropped. And it was really, really hard for me to catch anything that was moving. I was short a little bit, but my shorts were small and they weren't covering the false starts that we would have where I'd be looking for breakouts and, just nothing was working. So that's my learned lesson when in 2022 was after that happened, after I went through that drawdown period, and I said, look, psychologically as a human being, I have to talk about this stuff on camera every single day. And as you could probably imagine, getting on camera when you're going through a really bad drawdown is maybe one of the most difficult things ever, because it's not fun. People are like challenging your abilities and like whether or not. So that time was really tough for me, but I made a decision during that time. I was like, you know what, going forward, I'm not going for max gains. I'm going for minimum drawdown, 110%. I care more about my drawdowns than I care about my gains. And what I've found since then is my trading has gotten so much better, because now that I pay ultimate attention to my drawdowns, the gains take care of themselves. That's been the lesson here is, once you start taking care of your risk sizing and everything else kind of falls into place. So there's my thought process on it. That's my hard learned lessons. I've done this for a number of years. I've seen up markets, down markets, and I can tell you that When something is working very, very well for you, just be skeptical. Skepticism pays well in trading. Be skeptical when something is going really, really well. Not necessarily change what you're doing, but understand that if you're risking too much and you're getting too greedy and you're getting too optimistic, things will change, strategies will break. You have to be able to handle the drawdowns until the good times come back again. Hopefully that was helpful to you. I just had a full rant. So let's now take a look at some charts. Sorry for the rant of people who are like, I just want to see some ideas, Nick. I also wanted to mention that if you guys are looking for access to our VIP room, I mentioned this earlier, we're doing a really big discount this week off of our monthly memberships. If you'd like to trade alongside me and my team, we're currently doing 40% off of our VIP memberships. But while we are speaking here live, if you guys would like to join us in the action, we're going to do 45% off for people watching with us right now. So we'll do 45% off our monthly memberships, 30-day access for like not a lot of money. I don't know what the price is off the top of my head, but if you'd like some details, you can speak directly with someone on my team right here. Just direct message us there. You get 45% off. You get access to every trade we take, swing trades, shorter term trades, position trades, everything that I'm doing in the markets, as well as Frank and Ivan sharing his as well. We do coaching webinars in there. We have a chat room available. So if you're thinking about getting access to it, now's a great time to try it for 30 days for 45% off. So yeah, just staying on the transparency train here for a second. Our goal with this is we want to get more people to come join us in the Discord, try us out for 30 days, just so you can see it's worth the money. And then we hope that you'll stay longer term. Nick, if you're making so much money, why is the EDGEFINDER so expensive? What's up, Rick? Good to see you, man. And Rick, I got to say, you've been critical, but also supportive on my channel. I've seen your comments for like months now, so it's good to have you in the chat. But why is the EDGEFINDER so expensive? That's actually a really good question and something I've learned more about over time in the software world. So I went to school for software engineering, and when you see a company like Google or Microsoft or these ginormous tech companies selling a product, what you'll notice is that their prices are like way, way lower. But it's because they have like the economies of scale that a small business does not nearly have. They have such a huge platform to sell something that they usually will charge much lower prices. The EDGEFINDER is an expensive tool because it's an incredibly expensive product to develop and maintain. We have several, full-time people involved behind this product that make it possible. It's the curation of Frank and I's work over years and years of studying the markets. But more importantly, we have a ton of stuff that goes into this. I mean, here's just an example, just while we're on the subject, if this loads here. Let me see. Is this right? Am I in the wrong place? Anyways, we have all these different data logs and things that are pulling and accumulating data, and these things break and we have to fix them and we have to repair them. We have to add new features. There is so much time and effort that goes into this product, and there's nothing else really like it. So the reason the EDGEFINDER is the price is the way it is because it's not a cheap platform. It's a premium one. So if you're very serious about your trading, you want to get into fundamentals, yeah, the EDGEFINDER is not your cheapest option, and we will never be the cheapest option. We will always be on the premium side because you get what you pay for in this stuff, and we offer a really great tool. And we have a lot of people who use the tool and love it at the price that it's at. So we're not going to lower the price. So we do offer discounts on it. And if you're somebody who's thinking about getting the EDGEFINDER, I'll just let you into a secret so you can have time to prep. We're going to be dropping the price big time for a week next week. So we do have discounts that we do frequently. Next week is your shot on the EDGEFINDER. If you'd like some information about that, we'll just drop the link now in the chat so you can speak with someone on our team who can keep you up to date. If you'd like some updates on that, just let them know that you're looking for the EDGEFINDER discount, and we can get you set up. So we'll drop the link to the live chat center. Okay, yeah, so there's your update. And so with gold, I did trail my stop a little bit tighter on this off the 4-hour chart. So price broke through resistance here, found support again, found support.
So I've got my stop loss just below this 23.90 level, and things are just flying higher here. We do have Jerome Powell speaking in the next 20 minutes. So we'll see what that brings. Anytime Powell's speaking, it can be very volatile, as you know. How do you feel about dollar yen? Yeah, let's have a look. USD JPY. Okay, so dollar yen. I'm so curious about what dollar yen chooses to do at this support level, because this is a really key level of support. But where I'm hesitant about this is the dollar weakness might not be over. So I'm kind of conflicted on this, because when we look at the dollar, I'm sort of bearish dollar, but when we look at the yen, I'm also bearish yen. So I really don't have like a setup on this one. If I talk briefly about any yen setups that I can see, euro yen is the closest one to a setup that I might like, which like euro yen on the bullish side. Yeah, I kind of like euro yen. If it pulls back, that's a 50% retracement. Actually, no, it's a 61.8. So I do sort of like this setup. If we get EDGEFINDER confirmation, support level gets hit, I like that trade. On yen crosses, that's what I'm looking for. I hate Euro USD. What's going on with the Euro today? Euro, this is one that I like the upside for the euro dollar if it can break resistance here. This is another one. I've just got so many things like this right now, and I've talked about this a lot, so I won't rant on it. But there's just a lot of things that are moving really strongly right now, but not giving a lot of pullback setups. So I'm looking for something like this. What are the strategies you use in the Discord? The strategies used in Discord are what I talk about on my videos and live streams, and as well as, Frank and I have been trading together for a long time. We use a combination of technical analysis, mostly the 4-hour chart, 1-hour chart, and daily chart levels. And we mostly use fundamental analysis to guide which direction we want to be in, and simple technicals to set up trades. So within the group, I'll just show you, if you're somebody who is thinking about it, I'll just show it to you for a second. So we trade indices, we trade commodities, FX, stocks, and ETFs, and you can see Frank's trades and Ivan's trades, who trades primarily Forex. So if we go to like commodities for a second, so the gold trade is in here. Well, let me bring that back up. The gold trade in here. So the full breakdowns with simple technical charts, as well as, more importantly, like the fundamental analysis, right? Jobs data and PMI data, we traded the reaction there. So that's pretty much what it's about. It's every trade that I'm taking and showing on my YouTube channel, when I take the positions, they get shared inside of the Discord. So again, if that is something you are interested in, we'll drop the link one more time. We're doing 45% off, like I mentioned, for the monthly memberships. It's 40% off, but for stream viewers right now, we're doing 45. So click the link, chat with us right now, and get involved. How can you join the Discord? Like I said, just chat is right there. When you click that link, you'll be taken to a conversation spot with voice crack, a conversation with someone on my team who can help you out. All right, let's keep pushing on. We're about 15 minutes away from Powell speaking. NASDAQ up 0.5%, S&P up 0.5%, and the Dow Jones actually leading today, which is interesting. I mean, leading of the main three, but really what's leading is the Russell. The Russell is breaking out big time. Let's look at this on a weekly chart just really quick. So for those of you guys who don't know or trade the Russell, it's something that I really like to watch. I talk about the Russell a lot.
Most people, when they talk about indices, they talk about the S&P, they talk about the NASDAQ, they talk about the Dow. But the Russell 2000 index is small cap and mid cap companies in the United States. So these aren't your Apples and your Googles, but they're, your much smaller companies that make up a very large portion of the U.S. economy, and the average kind of business at home, if you will. So they matter a lot. And I watch the Russell a lot because while the S&P 500 has ripped to all-time highs, the Russell has really lagged. And I think that there is room. I know Chris Pulver is on this trade, and so is Frank. They're both long the Russell, and shout out to them. Shout out to Frank and Chris, because they've got the Russell. I'm watching the ship sail away, but I do like the Russell. It does look like we are set to get some rate cuts this year that could stimulate the economy, could keep growth in line, and the Russell may finally see some solid earnings growth finally. But we'll see. That's a lot of speculation. Now, let me follow that up. The theory, the hope is that we see interest rates come down. I mean, we're going to do some data diving here for a moment. So give me a second, I'll set this up. So let's go first to JOLTS jobs. So I've been given this speech many times, so bear with me here, but I'll try and keep it quick. If we take a look at job openings in the United States, they are consistently coming down. Now, before you get all, well, now we're jobs data is crashing. It's not crashing. Jobs data is actually at a pretty decent long-term perspective spot. I mean, this is where we were 2019. So this is like pre-pandemic zone. We jumped up. We dropped off a cliff when COVID set on. And then we saw massive job growth, obviously, because we had the pandemic and then people got their jobs back. So we had like rehiring, which caused a huge surge. That huge surge and all the money printing also led to huge levels of inflation. So we're finally seeing the job openings decline, but it's not like it's at like a horrible level. I would say you'd really get scared if you saw job openings kind of break this, right? So we are seeing jobs cool in the United States, but we're not seeing them crash. Now, if this accelerates, then you've got something different here. If you got something a little bit more perhaps sinister than just cooling in the jobs data. Unemployment rate is also trending higher, and we could go back a few years, take a look at this together. So where's unemployment rate at? Unemployment rate was very, very low pre-pandemic. It shot up during the pandemic as everyone, obviously, the economy shut down, jobs got cut across the board, and then we have recovered since then. And now we are still at very, very nice low unemployment rate. However, the recent trend has started to see an uptick in unemployment rate. This is why I think the Fed will cut rates this year. We have labor data, which is showing now, okay, unemployment rate is rising. We're not at critical levels. It's not like, oh, the whole world's unemployed or anything like that. Like we're not seeing, COVID or anywhere near it. These are record low levels of unemployment. We see good jobs data out of the United States overall, but it's starting to crack. It's starting to show signs of reversing course a little bit. So let's keep going. Stay with me here. So if we go to inflation data and we say, okay, look, inflation pre-pandemic was very low. In fact, don't we all miss the days where inflation was terrible? I'm sorry, no, we don't miss those. We are living in those. So pre-pandemic inflation was not bad. It was not bad. We were around targets. This is what the Fed wants. They want to see like 2% inflation. We skyrocketed after the pandemic, and a lot of people will take that as an opportunity to get political and say, oh, well, this is so-and-so's fault and whatever. The pandemic was thrown in the laps of both, of our previous presidents. And it's kind of tough to say who's really at fault. That's up for debate. But what's not up for debate is that all of us saw huge spikes in inflation, but we've now seen some progress. We're still above pre-pandemic levels in inflation, But recently we've started to see some progress again, and that's good news. I mean, who's not cheering for the grocery store to stop kicking our butt once a week, right? So we're seeing some progress in inflation again, which is good news. And let's hope that that continues, because that also suggests rate cuts might be on the table. So that's why I think rate cuts are potentially coming back into the picture. Now, what about growth? This is another one. Let's take a look at growth. Growth in the United States has cooled significantly. Now, that was a necessary thing to happen, according to most economists. And I'm not an economist, but my thought too, and most people's thought, is you're not going to get inflation to finally come down unless the growth of the economy slows down a little bit. Why? Because when people are getting paid a lot of money and growth is really strong, people go buy houses and cars and they travel and they spend money on goods, and that leads to inflation, right? When everybody's buying products, the prices go up. Like, think if you were a store and tons of people are lining your door every day, you're going to raise prices because you're like, why not? Why wouldn't I raise prices? Everybody wants my stuff so bad. It's kind of the same thing on an overall picture for the economy. So I know we're deep diving into data for a second, but there is a tunnel light at the end of the tunnel here after we get done with this. So the point is, growth is slowing, but not crashing. Data is rolling in for jobs that is showing signs that we may start to see unemployment rate rising a little bit. So my point with all of that is the Fed now seems to be very much tuned into lining it up. I've heard people say teeing up a rate cut, right? Seems like Powell. So today, all that to say, when we hear from Jerome Powell in just a few minutes, what people are going to be looking for primarily is confirmation of what I just said. Is the Fed kind of positioning dovishness for a rate cut? That is the question. Rate cuts in September. And Frank pointed out to me that there actually seems to be in the Fed Watch tool, maybe even 3 rate cuts possible this year. So interesting. I kind of lean towards like 1 or 2. I'm not overly optimistic about 3, but my point is, I've been on the camp of, I think rate cuts are coming this year for a minute now. And that's led me to being long gold, long silver, long TLT, and long technology. Now, last thought about the Russell, right? Nick, why aren't you long the Russell? You tell me. I wish I was, because my gosh, I'm missing out. But why I've chosen to stick with what has been working, which is the XLK trade that I'm in. The reason I am so kind of sticky with hanging on to XLK, which, by the way, what is XLK? You guys ready? Here we go. Finviz.com. XLK is this. XLK is this. This is the technology sector. So by buying XLK, I have access to Microsoft, Apple, NVIDIA, Broadcom, Adobe, Oracle, Palo Alto, CrowdStrike, ServiceNow, Salesforce, Intuit, AMD, Texas Instruments, Intel, Qualcomm. Long story short, it's the technology sector. And as frustrating as this has been for most of the other stocks in the S&P 500, technology has been the dominant player this year. So if we go to a 1-year performance, look how green technology is relative to the others. Technology has been the winner, and I'm staying with the winner. I'm choosing to stay with the winner. Why is that? Because what we're speculating is that growth is not going to continue to slow down in the US, that we're not going to see a recession, that's what we're speculating. And that speculation is why the Russell is jumping up so much. Inflation's coming down, but growth is going to hang in there. But for me, the NASDAQ with the XLK technology, we benefit from rate cuts, but we also know currently that these companies have tons of earnings, like Apple's not particularly impressive in terms of how much they make, but their revenue growth has not been super impressive. But look at your NVIDIAs and your Metas and these companies that are just killing it in terms of beating estimations. Now we're coming into earnings season. So long story short, I think they cut interest rates this year. I don't know what happens with growth. If inflation doesn't continue to come down soon, growth could really get hurt. But there's that question of, are we going to thread the needle where inflation comes down without growth crashing, and then we can cut interest rates and growth stays strong? If that happens, Russell is the place to be, right? Because Russell is like the sensitive but very superpower potential candidate here. If you get good inflation data and growth that stays strong, the Russell will be a monster performer, like it was the end of 2023. It was up like 30% in a couple of weeks. So yeah, XOK and S&P make the exact same moves. Directionally, they may do that, but here's the difference. If you take a look at SPX500, and let's actually do this, I'll show you. Do they trade directionally the same direction? Most of the time, yes, because the tech sector makes up a good weight of the S&P 500. But here is the difference. If you take a look at year to date, if you had bought XLK, you're up 25%. And if you bought the S&P 500, you're up about 20%. So there is a difference there. It's not massive, but I'll show you what is massive. If you had bought the, let me see if I can give you another example. What if you bought the Dow Jones? So if I bought the Dow Jones, look at the difference between tech and the Dow Jones, which is another index that a lot of people buy and hold, right? So if you bought tech, you outperformed a lot. So my point is, you know, buying XOK, is it directionally biased or directionally correlated to the S&P 500? Yes. Yes, it is. But the magnitude is the difference, right? And same thing to the downside. If I'm looking at SPY and you're saying, you know, do you want to buy SPY or do you want to buy, you know, something like XLK, which is tech, the tech companies? Well, to the downside, what would probably happen would be the opposite. XLK would drop harder than the S&P 500 in theory. In theory. So yeah, that's kind of what I wanted to point out. If you're a fundamental trader, you're probably an international economist. See, that's the thing. I don't really think of myself as like an economist, although I look at a lot of economic data. I think trading is a like, if you're a fundamental trader, do you use economist like theory? You do, but you apply it, right? That's kind of the difference. A lot of times, like, economists are very like theoretical, and you know, if you do pass these sorts of bills, what will it do here? And I don't really get into like prediction of that. I kind of look at what's the story and like what trends are happening, so I can actually trade it. That's why I kind of reject the idea. Like, I'm not an economist. I'm a trader. There is a difference. Powell's speech coming up. Yep. So we got a few minutes to wait. We have it pulled up for you guys. Don't worry. Producers are on that. They're on their A game today. We're on a 4-hour stream. This is part 2 of my contributions. We had several other guests come on today. So good stuff on the producer team today. They did an awesome job. I mentioned this earlier. If you guys would like to trade alongside us, any trades that we take inside of the VIP room are currently 40% off. But for stream viewers, during this live stream, you get 45% off. We dropped the link earlier. We'll drop it one more time. If you guys want to get access to the trade alerts being shared, hit that link. It's in the chat right now for you. You come join in the action. The thing I always mention is, like, if you're going to join our group, out of respect for people who are thinking about getting it, I show you guys my real account for it's not always fun to do so. When I'm in a losing streak, it's really painful, but I show you guys my live brokerage account all the time for the purpose of transparency. And because we sell a service, I like to try and offer, you know, you're watching real stuff. You're not, you know, because there's a lot of services out there, a lot of people who sell stuff, and they never show you that they're actually trading a real account. And to me, that is not cool. So if you would like to join into our room, that is 45% off. Come join us. It is worth the money.
I'd like more videos on PD arrays explained in detail. I have no idea what that is, and I have never needed it personally. So I'm not sure what that is. If that's like a technical pattern or something, I could tell you that the results that I've had over the years in my trading, both ups and downs, have not come from fancy technical analysis. It's fundamentals. One man, but yeah, I love this. One Punch Man. Good afternoon. I've seen that meme 74 times. He like walks up to the mic. It's like an edit of Jerome Powell. He walks up to the mic. He like taps. He says, "Good afternoon," and then the market crashes. It's a great one. Yep. So stand by. We're waiting just to hear from Powell here. We'll see what he has to say. Oh, PD array is a ICT concepts thing. Nothing against ICT concepts or people who use it, but I personally don't need anything past really, really simple technicals. Like what you see on my screen, that's all my hidden secrets. I just have support zones and resistance zones. And if I get really in the technical mood, I might draw a Fibonacci retracement. Crazy. No, but I think that I say this very frequently, so I apologize for repeating myself, but generally speaking, I think technicals are a trap for a lot of traders. A lot of people overcomplicate technicals. They get super fancy with it and they say, oh, I don't need fundamentals. But then like so many, here's one thing you have to ask yourself. If you think fundamentals don't matter, why is it that when they interview hedge fund managers and, huge, successful finance moguls, why are they all talking about what the Fed is going to do? And why are they talking about the economic data that's been coming out? You have to ask yourself, just think for a moment, why are all the most successful people in the financial markets talking about fundamentals? Right? Have you ever thought about trading with or making your own prop firm or hedge fund? No. Well, I have. I have before. I've even talked to my wife about that. I was like, do I want to go down the route of managing money? Because admittedly, I would probably make a lot of money, right? It's an incredibly lucrative venture to like start a fund and manage people's money. But what I realize is I don't want that kind of stress. Right? I don't want to manage people's money. I don't want the losing streaks for myself are hard enough. I don't want people calling me, telling me, hey, why are we in a drawdown? So this is the comment of the day. Larry Fink taught me fair value gaps. Larry Fink is the BlackRock CEO. And I am pretty confident that he's not looking at fair value gaps. One of the most powerful CEOs on the planet, really. Because BlackRock owns like everything else, right? They are even buying up houses in neighborhoods, I'm pretty sure. So like, yeah, that's crazy. But yeah, if you listen to Larry Fink, if you listen to Ray Dalio, if you listen to, heck, a lot of different successful money managers that go on, television or they get interviewed, they are always talking about the macro data. They're talking about company financials if they're talking about a stock. Like they're not. That being said, I'm not saying technicals are useless, because I've also heard many professional, money managers and traders talk about like, oh, it's building momentum. The moving averages look good. We've had a breakout, but it's like, if you just look at the best in class, like if you're trying to be a professional basketball player, then you watch and you learn professional basketball players, what they do, what they speak about, what they tell you about. Like that's who you got to learn from. Why is it in trading, people just go watch like some social marketing guru that has like a fancy car tell them like,
buy my course. Like, why is that? Why don't people listen to, and people do listen to, but why isn't it more commonplace to go listen to fund managers and people who like have serious credibility? Those people get like overlooked, and people just instead go for like social media BS, right? It's weird to me. But if you listen to those people, what you'll find is that their technicals are like simple enough that without seeing a chart, you can understand what they're talking about. Like I was listening to somebody talking about some stock, and they were pointing out like, oh, it's put in higher lows and higher highs the last few months. We've broken out on like the 200-day moving average. And I was like, I don't even have to see that chart. I know that chart looks pretty good, and they're buying on a pullback, and that's all they needed for technicals. Then they went into like the company's story and what had changed in their earnings reports and their projections. And I was like, yeah, that's I resonate so much more with that. And I that really changed a lot for me personally when in my own trading, is like learn from the real professionals, not the social media, fake stuff. They're always late for Powell's speech. Yeah, we're just waiting on his speech. Nothing yet. We're standing by. We're on the same wavelength. Fundamentals give you the direction. Technicals give you the entries. Yes. That's a good point. Sasha says, well, I think it's because in social media, they want to sell something, and big CEOs don't care about something like that. The thing is, a lot of these guys do actually have something to sell. Like hedge fund managers want people to invest with them so that they can get a piece of your return, right? If you give a manager a bunch of your money and they make gains on it, they get a piece of it. They also have management fees. So there is something that they have for sale. But yeah, it's I think it's less about trying to sell people like the dream, the idea of getting rich, which is an incredibly good marketing strategy. Come on, let's be real. Everybody wants to get rich without doing any work. Nick will watch Powell here. Yes. Just stay in. We'll have it pulled up in a moment, guys. He hasn't started speaking. We're just standing by. The James has got it on lock for us. We're keeping an eye on it. What's the edge you get on support and resistance levels, and why does that work so strongly for you? The edge is not using just the chart to make the decisions, right? It's about using the fundamentals. The real data is why, that's the thing, is like, for me, people ask like, how do I know it's not a false breakout? You don't, but with a good understanding of the underlying story behind the market, the fundamentals, right? The economic data, the company financials, whatever you're looking at, right? The good understanding of that, with a higher probability whether or not a support or resistance level will hold. It's not the way you draw your support. This is like mind breaking for me a couple of years ago when years ago when I really started to reach that like profitability stage. It was mind boggling to me. It's not about how you draw your support. It's not how you draw your trend lines. It's tying up support and resistance and trend lines and Fibonacci and all that simple stuff with a good understanding of why this market should or should not continue in a certain direction. All right, we got him speaking now, so we'll pull it up, guys, and we'll see what he has to say.
Tragic events in Pennsylvania. Some people wondered whether that would affect the markets today. Can you give us any insight as to whether you think it's had any impact on the markets?
David, I think I'll leave the markets out of it for a second, if I can, and just say that it was really a very sad day for our country. Political violence has no place in our society, and I condemn it in the strongest terms. I know we all do. A man died at a political rally. 2 other people were critically injured. It's just a sad day. And I'll say that I'm grateful that the injuries to the former president were not more serious. I'd rather not comment on the markets. It's too...
Okay. So let's get another answer that you don't want to give. There are a few billion people in the world who are waiting to see what interest rates are going to be doing. Do you have any insights on where interest rates might be going?
So I'm going to take that as a great opportunity to talk a little bit about the economy and then talk about where that leaves us with policy. So I would just start by saying that the U.S. economy has performed really remarkably well over the last couple of years. 2023, last year, was a year in which the economy grew well above 3%. The labor market remained very strong, unemployment remained very low, and inflation came down at quite a sharp pace, particularly in the second half of the year, by a very large amount. And that forecast was almost unheard of. It was unheard of before 2023. So big upside surprise that year. This year, we had expected the economy to slow a bit gradually, the labor market to continue to gradually cool off after being overheated a couple of years ago, and inflation to continue to make progress. And something like that is basically what has happened. The economy is growing now at about 1.5% in the first half of the year. Most forecasters have about a 2% growth rate for the full year. The labor market, again, has moved into better and better balance to the point where I think you can now say it's essentially no tighter than it was in 2019 before the pandemic. Remember that the labor market of 2019 was a very strong labor market. So we're back to that place, no longer overheated. On inflation, in the first quarter, we didn't make any more progress. The second quarter, actually, we did make some more progress. We've had now 3 better readings, and if you average them, that's a pretty good pace. So turning to policy, your question, what we've said is that we didn't think it would be appropriate to begin to loosen policy until we had greater confidence that inflation was moving sustainably down to 2%. We've been waiting on that, and I would say we didn't gain any additional confidence in the first quarter, but the 3 readings in the second quarter, including the one from last week, do add somewhat to confidence. We've also said that we're a dual mandate bank. For a long time since inflation arrived, it's been appropriate to focus mainly on inflation. But now that inflation has come down and the labor market has indeed cooled off, we're going to be looking at both mandates. They're much better balance, and that means that if we were to see an unexpected weakening in the labor market, then that might also be a reason for reaction by us.
Okay, I think I understand. So to put it in terms I can for sure understand, the markets are suggesting, the futures markets, that there's a 90% chance that the Fed will lower its discount rate in September. Do you think the markets know what they're talking about?
So today I'm not going to be sending any signals one way or the other on any particular meeting. So just to ruin the fun right at the beginning. I simply, we're going to make these decisions meeting by meeting, and we're going to make them on the basis of the data as they come in, the evolving data, the evolving outlook, and also the balance of risks now that the 2 mandates are basically close to being in balance.
All right, there are some people who say that the Fed would not like to lower interest rates in a presidential campaign period because you could be criticized for helping one party or another. Do you have any comment on whether that's an accurate view?
I do. So our undertaking at all times is that we'll make our decisions based on the incoming data, the evolving outlook, balance of risks, and only on that. We don't take political considerations into account. We don't put up a political filter on our decisions. That would not, it's hard enough to make these decisions based on the appropriate factors. If you're going to add a whole different filter in an area where we're not experts, that's not going to improve the quality of our decisions. And it's also not the orders we have from Congress. Our orders from Congress are to use our tools to foster maximum employment and price stability, and to do so without political considerations. That's what we're always going to do. If you look at the modern record, that is what we do. And we don't think about election cycles or anything that's political.
Okay. So the Fed has set a target for inflation of 2%. Now, can you clarify, does that mean that the inflation rate has to be at 2% before you're ready to move, if you are ready to move, or does it have to be within sight? And what does it mean to be within sight?
So when we change interest rates, that tightens financial conditions, and that in turn affects economic outcomes, growth, labor markets, and ultimately inflation, but with lags that can be long and variable, as Milton Friedman famously said. And the implication of that is that if you wait until inflation gets all the way down to 2%, you've probably waited too long, because the tightening that you're doing, or the level of tightness that you have, is still having effects which will probably drive inflation below 2%. So we've been very clear that you wouldn't wait for inflation to get all the way down to 2%. Our test has been for the past quite some time that we wanted to have greater confidence that inflation was moving sustainably down toward our 2% target. And what increases that confidence in that is more good inflation data. And lately here, we have been getting some of that.
Okay. So when you say we, let's talk about who we is. The FOMC, for those who don't follow Washington acronyms, it stands for what? What is the FOMC?
It's the Federal Open Market Committee.
Okay. And who is on that committee?
It's a little bit complicated, our structure is. We have 7 governors here in Washington, all nominated by the president and confirmed to staggered 14-year terms. And we have 12 Reserve Bank presidents at reserve banks around the country. All 19, 7 plus 12, are participants on the FOMC. In any given year, all of the 7 governors vote and 5 of the 12 Reserve Bank presidents vote. But one of the voters is always the New York Fed.
Okay. And so when you have an FOMC meeting, how many do you have a year?
We have 8 a year.
Okay. So you have 8 a year. And when you get together for 2 days or so?
We do. We so generally starts at noon or in the morning of a Tuesday, and we go all day. We generally talk about the economy, the financial stability issues, whatever special topics there may be. And at the end of the day, each person speaks on those things, and I speak at the end of that day. Then there's a brief presentation on monetary policy, and then we go to dinner upstairs in the Martin Building, and we come back the next morning. We come in at 9 o'clock, and we talk about monetary policy until we're satisfied with the outcome on monetary policy, and that usually takes most of the morning.
Okay, so when you go into an FOMC meeting, that the first day, do you pretty much know where you want to come out at the end of the second day, or do you want to listen to everybody and you haven't made up your mind yet?
You know, the way it works is that, you know, I talk to the other 18 participants regularly, and I talk to all of them at least once in the 10 days before the meeting. And I'm thinking about this 3 or 4 weeks before the meeting. You know, what should we want to achieve? What data do we need to see? How do we want to change our communications? All those things. And so I talk to people, listen to them, and I try to put together an answer that has broad support on the committee. And so when we go into the committee on Tuesday morning, you know, I'm confident usually that I know where this is going to go. But, you know, things happen. We get data during the meeting sometimes, events happen. But largely you go in kind of knowing what the likely outcome is. And that's the design of it.
So normally, you know, if somebody calls somebody, you call all the other board members, FOMC members from time to time. When you call them, do you have a trouble getting your call returned, or you get a call right back, or do they take your call right away?
These calls are scheduled generally, and they go all day long. I have, like, the Friday before the meeting, I think I have 11 half-hour calls, and it's pretty, you know, we talk about the economy. We talk about very specific aspects of the economy, about our mandate, and then we talk about policy. So there's a lot to talk about. I take pretty careful notes, and people think, but by this point, they've read all of the preparatory materials probably twice. They've talked about it with their staffs, and so, you know, you get a really good sense of what people's thinking is. It's a very good process.
But you don't feel you have to have unanimity when you make a decision, right?
No, I always try to listen carefully to everybody. I find that if you do listen and understand people's points and try very hard to incorporate them into what we're doing, for most people, most of the time, that's going to be enough. People do dissent. That's completely fine. We actually have, given that we have 12 reserve banks with their own economic staff and people with different backgrounds on the board and among the reserve banks, we have a disparity of views at every meeting on every question. But people do. I mean, I think there's a you want to dissent on important things, and so people are perfectly able to dissent, and when they think that's appropriate, they do.
So a lot of people in Washington, government agencies, are very good at leaking things. You're not that good at that. Why doesn't the Fed leak more? Why don't you kind of leak a lot more about what you're going to do? You just don't leak that much.
I'm kind of proud of that, actually. We do take our obligations to confidentiality very, very seriously, and because we know, you know, how consequential it would be for someone at the Fed to be leaking. You know, our whole success depends on having the public's confidence that we're ethical, and that we're working on behalf of all Americans and not on behalf of ourselves, and we're not leaking and that kind of thing. So we do have a culture. When we're working on for example, a regulatory matter or some matter involving one of the banks, it never leaks out of the Fed. So I am proud of that record.
Okay, so if you go back in history, when inflation began to arise after COVID, at some point people said, including you, that it was transitory. In hindsight, what do you think people missed about the nature of the inflation? Why was it more enduring than people initially thought?
So this is a question that people will be writing papers about and debating long after all of us are gone. And it's early to say. It's actually kind of soon to be answering it. But I think so. Here's my answer to that question. When inflation arrived in March of 2023, it was really coming out of the goods sector, and it was connected to really high demand for goods, and it was. And the supply chains, global supply chains, which account for most manufactured goods, collapsed because of too much demand and because of COVID. And to us, that looked like a temporary, fleeting situation. We also lost several million people out of the labor force. So wages went way up as the economy really boomed when we reopened the economy. And we thought, vaccines were coming in, and we thought that would fix itself too. Kids would go back to school. We essentially overestimated how quickly the economy would return to normal. These things finally did happen in 2023, but they didn't happen in 2021 or 2. And what we meant by transitory was that it would go away fairly quickly without the need for our intervention. You don't want to intervene with interest rates if something is going to go away quickly without us intervening, because monetary policy, as I mentioned, works with long and variable lag. So the lure is you look through things like a temporary oil shock. So that was the mistake, was that it actually didn't reverse itself. The problems with the supply side didn't reverse themselves until 2023, when they really did, when we got a big burst of employment, and also the supply chains were fixed.
So in hindsight, now knowing everything you now know, would you have done anything differently? Would you have had less quantitative easing? Would you have changed interest rates differently? What would you have done differently now knowing everything we now know?
It's almost unfair. Hindsight's always 20/20, right? We remember what we were doing in real time. We went from a really nice economy in December of 2019 to a global partial shutdown of the economy. And we were contemplating, there was no thought that vaccines were around the corner. The economy's closing down. We were looking at severe and perhaps prolonged downside risks. Literally people thinking and doing work on, are we going to have another depression? Is it going to be the 1930s? So governments around the world, and in particular the United States government, really went to work to provide a lot of support to the economy. We did everything we could, including many things that were red lines that we'd never crossed. We crossed them to support the economy and support the financial system. And it was all done because we were managing severe downside risks, which did not materialize. We did not have a depression. And part of that is because of what we did. Then the economy reopens, and demand is very, very strong. And we saw a big burst of inflation everywhere, including in the United States. It was different in different places, but so that's what happened. And it's not. That's how I would answer that.
Okay, but so what you did, you're happy with what you did in hindsight, you would say?
In foresight, I think that the work that we did in 2020 in response to the pandemic will stand up very well in history. I think people will look at the things that we did, and essentially the financial system was grinding to a halt all around the world. We acted. We were the first central bank, and we were the most supportive. And I think that work will hold together when historians are looking back on it a long time. I think when you get to the inflation era, that becomes a different question, and people are going to be arguing about that for a long time.
As a result of the action you took, and the economy was thought to slow down a fair bit, and many people use the phrase hard landing to describe, hard landing is a euphemism for a recession, I guess. People thought in 2023 we might have a hard landing. People thought in 2024 we might have a hard landing. And none of these people were economists, professionally trained economists, but they seem to be wrong. So do you rely on these economists very much in the future when you're projecting whether you should listen to their views on where the economy is going, or how do you react to the fact that we haven't had a hard landing and disappointed all those economists?
So I'll just say that, as someone famously said, predictions are very difficult, especially about the future. Right. And also, I know a lot of economic forecasters, and forecasters are a humble lot with much to be humble about. It is extremely difficult. Every good forecaster will tell you that it's very, very hard to know what the economy is going to do. I'll give you a good example. In our Teal book, every FOMC cycle, there's a book that goes out, and there's a baseline forecast in that. And our forecasters are really the top people in the field, and they give you that baseline. They also give you a section in that book which shows 7 or 8 alternative scenarios, which they also regard as plausible. So it's always a probability thing like that. It's not we've identified this one thing. So last year was a big surprise, and it was a big upside surprise. So of course we welcome those. We'd be happy to have more of those. But it just was one of those things where where things turned out much better for a whole variety of reasons. I will say that on the hard landing question, I have always felt like that there was a pathway to getting inflation back down to our 2% goal on a sustainable basis without the kind of pain in the labor market, the kind of high unemployment that has been typical of tightening cycles and getting inflation down. And the reason why my colleagues and I thought that was that the labor market was so overheated that it could cool down quite a bit without having to. There still is apparently no slack in the labor market. The labor market does not have slack. Essentially, you're at equilibrium now. But look where inflation is. Inflation's at 2.5%. So this was in defiance of a lot of conventional wisdom, but we thought that was right. And that says that you have to be, one thing you learn is humility in forecasting. But so I wouldn't rule it out, but I would say that the kind of hard landing scenario is certainly not the most likely or a likely scenario.
So you have said you have a target of 2% inflation. You want to get it in sight of 2%. Do you have a similar target for unemployment? If unemployment went to 4%, are you saying, well, that's okay because we don't need to do anything because 4% is tolerable? Or do you have such a similar kind of target as you do with inflation?
So you can't reduce unemployment to a single number because for a couple reasons. First of all, the natural rate of unemployment probably moves through the cycle and over time. Maximum employment is a function of many, many different variables. It doesn't reduce itself to a specific number that would be durable over time. So inflation has 2% inflation some years ago became the global standard that everyone aims for in one way or another.
Some people have suggested that the Fed's independence is not as good as people talk about it being, and that maybe we better have more White House coordination with the Fed. I'm sure you've heard about this.
I think that.
Any comments on that?
I'd be happy to comment on what independence, on the point of central bank independence. So I think a long time ago, people have learned that a central bank that's independent of political consideration does a better job getting inflation under control. And that is accepted wisdom in all advanced economies around the world. It's also a principle that has very, very strong and broad support where it really matters, which is in Congress. You talk to senior leaders in both chambers, in both political parties, and they all understand that you want an independent central bank that doesn't run monetary policy to support or oppose any particular politician or political party.
Independence is one thing, but you still have some information sharing. So how do you coordinate or share information with the administration? Do you regularly meet with the Secretary of Treasury or White House staff people, or how do you communicate with them?
So there's a very standard set of relationships which doesn't change at all, administration to administration, and you could start anywhere. But Council of Economic Advisors is in the White House. We have lunch with them every month or so, although they get canceled sometimes because we're all busy. That's one thing. I have breakfast with the Secretary of the Treasury every week, unless she's traveling or I'm traveling. I have since there was a National Economic Council, there's been an irregular / sometimes irregular breakfast with the head of the NEC, and I do that too.
You ever get a call from the President of the United States saying interest rates are too high or something like that?
So, ever? No, I would say that meetings with the president are rare and appropriately so.
Okay. So you were originally appointed to the board of the Fed by President Obama,
Yes.
and you're appointed chair by President Trump and reappointed by President Biden. And your term as chair goes through, I think, May of 2026.
That's right.
So any thought about staying all the way through May 2026? You're going to do that?
Yes.
Okay. And if some president came along and said, well, you did a great job, I'd like to reappoint you, would you consider that?
I have nothing for you on that today.
Okay. All right. And is being chair of the Fed a enjoyable job or not so much?
It is actually. I think I enjoy it. I enjoy it quite a bit. I do. First of all, it's a great honor. It's incredibly interesting. I love the people we work with. I love the institution. At this time in my life, it's just been a great thing. I'm in my 13th year there now, and it's been really challenging and all that. But what else would you want? I'm very happy doing the job.
So you're obviously in pretty good shape. How do you stay in shape? Do you walk a lot, or you ride bikes, or what do you do?
Yes, I do. I do those things. I swim, I ride my bike, I go to the gym a lot. I try to stay fit, as you'll remember from our days together.
Right. So but when you were, let's say, riding a bike, do people get out of the way, or do you have
Nobody knows you with a bike helmet and goggles on. You're just another person on the road.
So I think you have said somewhere that when the Fed does lower interest rates, not saying that you're saying it's going to do that, but if the Fed does lower interest rates at some point, you didn't think it was ever going to go back to kind of the free money practically of years ago when interest rates are almost zero. Is that a fair statement, that you don't think it's a good idea to go back to interest rates as low as they once were?
The period between the global financial crisis and the pandemic was historically unusual from the standpoint that we had ever lower interest rates through that era, including a part of the era when, for example, sovereign debt of major European sovereigns was trading at a significantly negative rate. And so that was quite unusual. And still, even with rates that low, inflation was very low, below target. So the question is what caused that, and are the forces that caused that gone for now? And I think most people attribute the low inflation era to slow-moving forces like demographics, globalization, technological evolution, things like that. And those may or may not have changed. But nonetheless, I look at where we are now. Our funds rate is 5.3%, roughly, give or take. And it feels like it's restrictive, but not severely restrictive. So it tells me that rates, at least for now, the neutral rate must have probably has risen from where it was during the inter-crisis period. And I think instinctively, I can't prove this. We're gonna learn about this empirically, but it seems to me that the neutral rate is probably higher than it was during the inter-crisis period, and so rates will be higher.
So the Federal Reserve, without saying you're going to lower interest rates at this point, if you did lower interest rates at some time, I thought you had said you didn't want to lower interest rates and then maybe say, well, maybe we made a mistake and we're going to increase them again. You want to have a policy that's fairly consistent for a while. In other words, lower interest rates, but not bounce back and forth every FOMC meeting. Is that a fair summary?
That wouldn't be a great outcome, but we don't want to be too risk averse. I think we want to, we know that the economy is unpredictable, and the test we've set is we want to have greater confidence that inflation is moving sustainably down to 2%, or alternatively, if we see unexpected weakening in the labor market, or some combination of those two. And when we see that, and the data really show that, and that's reflected in our confidence and our understanding, then it'll be time for us to move. And we won't worry. Of course, it wouldn't be great if you were moving up and down quite a bit. That wouldn't be ideal.
Some of your predecessors used to speak in what I call Fed speak, which is to say incomprehensible to the average person. You try to actually explain things. Is that because you're not an economist, or you just like to explain things better because you actually sort of explain what you're likely to do at the Fed, and then you actually explain afterwards. Does that upset a lot of people at the Fed that you actually try to put it in English?
No, I don't think so. No, as you know, I enjoy communicating with people, and I didn't have a career as an academic economist. I'm not a trained economist, so I don't speak like one. And that seems to, I do hear a lot from, for example, people on Capitol Hill that they really appreciate that they can understand what I'm saying.
So today, the ECB lowered their interest rates recently. So why do you think the ECB lowered interest rates before the Federal Reserve? Their economy is weaker than ours, or what?
Yeah, so they're different. There are differences if you look around the world, and the big difference between the United States and many other nations is just that our economy has been so much stronger. Europe went through, the European Union went through significant Eurozone, a significant period of very, very low growth, while we were growing, 3% plus last year. So we're in a different place. And I mean, actually, what's more remarkable about the current situation is how much there is in common between what happened. The inflation broke out everywhere. Central banks did kind of very similar things. There's little differences in timing in terms of starting to loosen policy, but really the era, I think, will be known much more for its commonalities than it is for its differences like this.
So when the FOMC makes a decision, let's say to increase rates or lower rates, they finish their final meeting, you are authorized then to go out and explain what it is. How long before, after the meeting ends, before you go out and publicly explain it? Is it 20 minutes or so?
It's 3 or 4 hours usually.
3 or 4 hours?
Yes, because the meeting might end at, I'm out at 2:30 p.m. That's when the press conference starts at 2:30. So I'm usually the meeting's over by 11.
And you don't worry that things will leak out in that interim period of time, I assume?
No, I don't.
Okay.
People know better, I think. And
All right, guys. I think we've seen enough, at least of the main questions. Seems like it's really slowed down here, so I'm gonna hop off for now. If anything updates, we'll drop it in our Telegram channel. If you guys aren't in the Telegram, it is free to join. We'll drop the link in the chat. It is a great way to keep up with our ideas and updates off the live stream. So if you enjoy the live streams, if you enjoy the commentary, we continue the commentary on Telegram. Frank and I, mostly Frank is our readable content guy, so he'll be keeping you updated there on everything that's going on. So make sure, if you have not already, join the free Telegram channel right then and there. You can come join the action. Thank you guys for hanging out with me. That's going to be it for now. But again, stay tuned in the Telegram. We'll keep you updated there. Thank you guys for watching. Have a great rest of your day. We'll see you next time.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.